Hello and welcome to CoinDesk Live. We are at the Avalanche Summit in London. We are bringing you everything that's happening behind the scenes. This is the premier gathering for visionaries shaping the future of blockchain and Web3. I'm Jen Sanasi, here with my co-host Sam Ewan. Sam?
Jen.
From Toronto to London.
We're doing it again.
We're doing it again.
I know. We literally were on a plane like 2 days ago from Consensus, Toronto, flying here. We were actually with a lot of the Avalanche folks over in Toronto. A great showing. And luckily, we get to change scenery. We're in this beautiful old house called the Hatfield House, which feels like if I had an apartment in London, this is the kind of place I would like.
This is the kind of place I would love to be. For those of you who are joining at home and can't witness it, it is a historic site. It is what you imagine when you think of the countryside in London. So I think it's going to be a great event, seeing this tech and innovation and almost the future combined with this like almost laid back, peaceful, natural, historic site.
Well, you know, with locations like this, you know, it could be very proper in Downton Abbey. It could also go Saltburn. Like things happen, and I'm just saying, I don't know that that's going to happen here. I'm just saying that I think it's going to be a great time for us to meet some amazing builders, some people who are shaping the Avalanche network, those who are looking at this specific summit. I know this is your second. As you know, the next step in the journey of Avalanche, which has had a crazy year. So I'm really excited to talk to some of the folks here. And also we're going to hear from some of the keynote speakers and the people who are going to be on stages. We just heard, Jen, there are 3 stages plus an entertainment stage, which I think that means...
Love an entertainment
stage. I think that means we are going to be performing, is my guess.
Well, I mean, if you've signed me up for performing, I am down for anything. But like you mentioned, Sam, this is my second Avalanche Summit. We were at the Avalanche Summit in Buenos Aires at the end of last year. And I have to say, we had a ton of incredible conversations at the desk. I'm excited to carry on those conversations behind the scenes here at the Avalanche Summit in London. In Buenos Aires, we had a lot of conversations about what was happening locally there, right? What builders in Buenos Aires were thinking about, what problems they were solving, what the local economy looked like when it came to crypto markets. And so I'm really excited to bring that conversation here to London to talk about what's going on in the UK and Europe more broadly. For everyone who's watching at home, like Sam said, it's not only the conversations that we're having here that are exciting, I guess, for me, but the fact that we get to bring our audience into the stages for people who weren't able to travel to Hatfield House is going to be really cool.
So let me just ask you, because you were in Argentina. Argentina, you said, had a lot of local flavor. LATAM is a market that's just blowing up in the crypto space. And here we are, though, in Europe, which is a little bit more, I'm going to say, mature when it comes to just their evolution into crypto. Still a ton of work to do in all of these regions. But what are you expecting will be different between Buenos Aires and London?
You want to know what's so funny as you were saying that? I was thinking back to the dominant narrative in Buenos Aires, and it was all about stablecoins and financial rails. And it just speaks to how quickly this space moves, because that's not what we were talking about this side of the pond. And here we are again talking about stablecoins, financial rails, real world assets. And so I think the conversations are going to be similar, but we're going to be talking about things through a different lens, right? In Buenos Aires, it was very grassroots, very, government focused. Like, how can we get people who didn't previously have access to these financial systems to money that can hold its value, currency that they can use in their day-to-day. And here it's a similar story, but we're talking about real-world assets. We're talking about financial institutions that have products that work, but are using the same technology and infrastructure.
But I think we have to look at the fact that even just last night, we saw the first passage of the Genius Act.
Yep.
In America. And I think that is the first opportunity to start a conversation more seriously about stablecoins in the US. And the US seems to, at least at the moment, being one that's really trying to push the rest of the world into sort of rethinking their regulatory framework. I think Europe has been ahead of us in many ways, and now it seems like we're catching up here. But it's not surprising that I think stablecoins and RWAs and tokenization are going to be so much on the conversation that we're going to be having over the next 2 days, because of the fact that people are recognizing the real-world use case of tokenization, specifically around stablecoin payments. We talked about LATAM a minute ago. That is an area where you have a lot of currency volatility. And the idea that someone could say, oh, I can keep this in a digital dollar, I can keep this in a digital yuan, in a digital euro, and not have to worry about whether my currency is going to be devalued 20% the next day. That to me is very exciting. And I'm wondering, again, how much of that we're going to see here. Because I know, even though we're in this beautiful historic location in London, that there's a lot of people here that are building for other parts of the world. And so I think that's one of the exciting things I'm excited for.
I'm curious to hear how builders here are watching legislation in the United States. Like you said, European legislation was moving a lot faster than we were in the United States. Of course, there was MiCA that doesn't cover the UK. And so I'm really interested in hearing how the legal minds here are thinking, how startups are being advised by their counsel when it comes to building in the UK, when it comes to thinking about having customers in the European Union, and when it comes to building here, having customers in the European Union, and also having customers in the United States.
It's going to be wild. I think, we're both just at Consensus. I think both had conversations with John Wu from Avalanche, who I think was just so positive in all the things that he was expecting to see happening out of this summit, but also what they were bringing to Consensus. I think about our last year, and our last year was Middle East, Asia for Consensus Hong Kong, now to then to Canada, now that back to Europe. I think there's going to be a real global play that people are starting to see, that there is no such thing as localized crypto anymore. That crypto is a truly global movement, and the people who will benefit of it, really the kind of global majority, the 70% who don't have great financial systems, are going to start to see how these things can play out in their lives. And I'm just wondering, were there any conversations you had at Consensus or that you're excited about having here that really sort of echo out this idea of crypto for all?
It really is a global story. I just want to reiterate that again, Sam. I had a ton of conversations at Consensus. I think I said to you at the desk that I was really passionate about hearing about real world use cases. And it comes back to this, there are places in the world, like in North America and the United States and Canada, where things work for most people, right? But in so many other places in the world, they don't. And crypto really solves a problem, a pain point that they experience every day. And you brought that up. Something I want to talk about before we get into programming is Avalanche has really been known for gaming. And when I think back to Buenos Aires, gaming was a huge theme there. I'm really excited. Gunzilla Games is going to be here off the grid, and MapleStory that launched MapleStory N on Avalanche recently. I don't know if you know, Sam, but MapleStory comes from the largest gaming publisher in Korea. And so that is another huge mainstream story, mainstream use case that I'm excited to hear about how these really established brands who already have an established community where things already work, how they're opening up new opportunities for them.
Yeah, I had the pleasure of having a conversation with Theodore from Gunzilla in Toronto last week. And I actually asked him a question. I said, gaming is something we've been being told now for a number of years is the gateway. And I believe a lot of us still believe that.
Do you still believe that?
I do, with a caveat, which is I'm still seeing a bit of a resistance. And the resistance is interesting. I watched a lot of gamers playing Off the Grid, which is Gunzilla's game. And it's a good game. If you're a gamer, it's a battle royale type game, if you know that style. and what's always interesting is when you watch the recaps that these gamers do, the first 5 minutes are them kind of well, I'm not really sure about this crypto thing, But then literally 5 minutes in, they're just playing the game and they're having fun. And so I think the question becomes for Gunzilla, for MapleStory, is how do we continue to sort of hide crypto in the background? We saw what happened when Discord went to crypto and the gaming audience revolted. And they revolted because they said, hey, you shouldn't be able to buy your way to success in a game. We saw in the last couple of months how Elon Musk was sort of really dragged across social because he was hiring top gamers to play his characters in some very popular games. So gamers like have this interesting sense of purity, I would say. And when you look at something like Gunzilla or MapleStory, you have an opportunity to rethink that conversation and to say, what if we just gave you a great game, right? The beginnings of some of this game conversation started around Axie Infinity, which was very play to earn, but it wasn't a great game. It was kind of like rudimentary Pokemon. Now we look at something like Off the Grid, which is like, it's a top tier game. Like, it's fun. And so I think as long as you're comfortable to say, yes, there is a marketplace like a lot of games have. Yes, you can sell things at a premium like a lot of marketplaces have. Yes, it also is crypto. Then I think people are going to start to say, all right, maybe I'm okay with that. Why? Because the game's fun. So I think that's what we should actually pull on that thread when we talk to those guys, which is, are you going to be leaning into the crypto conversation, maybe a little bit more here because you're at Avalanche? Or are you very comfortable to say, let's keep pushing that over to the side, and if people want a wallet, cool, good for them. In the same way that people who use Blackbird or people who are utilizing buying crypto on Robinhood don't really care that much about the crypto. They just want to do the thing that they want to do.
Well, you and I talked a lot to folks who are building at the desk and Consensus about this, having the crypto narrative really fall to the background, having the crypto be the infrastructure, the thing that powers this elevated experience for users. And we don't really talk about it. Some of the builders we spoke to had no mention of crypto, blockchain, or NFTs on their websites. It wasn't in their marketing. They just provided a product that people really wanted. And then when you come to an event like Avalanche or Consensus, you can talk about the technology because that's what people are here to do, right? We're here to talk about the tech. We're here to talk about advancing the tech and bringing it to a more mainstream audience. But I think that's exactly right. We'll know we got there when we are no longer talking about it. Hopefully, Sam, you and I still have a job.
I mean, we're going to do our best for that.
We're going to do our best.
But I will say, Jen, though, that I was having a conversation with someone at Consensus, and I said to that person, I said, do you remember Eudora? I said, do you remember Pine? And they were kind of like glass-eyed look, no idea what I was talking about.
That's me right now.
That's you.
Yeah.
And then I said, wait, do you remember Outlook? And then he said, oh, email. And I said, yes, these were three very popular email services. Outlook being Microsoft, Eudora was kind of a standalone app, and then Pine was a terminal email system on Unix. So if you're really tech forward, that's what you used. And I said, there was a while where that's the kind of question you would have every day with someone like, oh, what email client are you using? And the fact was that at some point we just accepted email was email, and whether you're using Gmail or Apple Mail on your phone, no one cares about it. No one worries about your email provider and your email service. I think we're closer than we think to that being crypto.
How close do you think we are?
I think we're a year or two away from a lot of people engaging with crypto and not knowing they're doing it. And I think that's actually the thing that's really exciting. And then there are going to be those that really want to engage.
We had this conversation at Consensus again, and I'm curious to see how much AI comes into the conversation here at Avalanche. Do you think that AI is going to be one of the catalysts that brings crypto mainstream? And I ask you this on the back of that gaming conversation we have. When we talk about these worlds, these autonomous worlds, AI really kind of helps accelerate that.
I'm going to cautiously say maybe.
Okay.
And I want to find out more while we're here over the next 2 days. And I only say that because I've seen the utterly quick rise of OpenAI, which I think is at about 400 million users right now. And then seen what has happened with Grok and with Gemini and with what Facebook is working on I think it's Llama. And I think AI is just being infused into big tech quicker than AI is being infused into standalone decentralization. So someone's going to have to make the case. And it doesn't mean we're not going to get there, but someone is going to have to make the case that we're not replicating the Web2 big tech ecosystem with AI and it's just not a plugin. I'm not positive yet that one of those sides is going to win dominantly, but I'm wary that the amount of money and power behind the the centralized Web2 services is going to be kind of hard to beat up.
Want to hear my hot take? I think, I was a real DAO gal, and DAOs kind of fell to the back burner, right? People are focused on other things. And I think there's a real use case there. No one really figured it out. It's hard to get people to come back and want to participate in these organizations every day. I think with the advent of AI agents, DAOs could possibly become real decentralized autonomous organizations where, I can tell my AI agent, this is what I'm passionate about, this is what I care about, this is how I want to participate in this organization, and it can go in and vote on my behalf. And we don't have this issue where we're trying to incentivize people to come back again and again to participate in these DAOs. So that's where I think AI agents is gonna maybe bring DAOs back to the forefront.
I think the idea of agentic AI is a big conversation that we should be talking more about. I think DAO services and DAO organizations are one that will absolutely benefit. I think you're spot on with that. I think the DAO experiment was fascinating, and I think the thing that I am wondering about is the commitment that people would make to that. One could say that, Green Day fans are a DAO, right? They are
Totally.
a decentralized group of people all sharing similar passion points, all spending money against the thing that they love, and all collectively helping to move the needle. But there's still a corporation that's making a decision there, which is the corporation of Green Day. And I think we've not seen, other than some of the chains, which I think do it quite well, we've not seen a non-financialized DAO be very successful. So I'm very fascinated to hear more about that from you and why you think that will go, and specifically how agentic AI will bring that to the forefront, because it's a fascinating way to think when agents can act on our behalf, especially on things like voting in DAOs,
totally.
which we know I miss every vote in every DAO
Me
I'm
too.
in. So I get it.
Yeah, I mean, it really just comes from that exact thing. I want to participate in a DAO. I miss every single vote. And I feel like if I had an AI agent to help me participate in DAOs, I could really be involved more fruitfully in the communities that I want to be involved in while doing all of my other things. So I just am really bought into the AI agent narrative. I don't know. But it's interesting you say that, DAOs we haven't seen a DAO experiment take off that wasn't financialized. I want to bring that back to gaming because it's the same thing, right? We haven't seen an autonomous world, a game take off that hasn't been financialized. And the only one that has is here at the conference today. So it will be nice to hear from them.
It's true. Well, I think it's a good question to see whether or not DAOs are, if gaming organizations are DAOs, right? And I say that because the idea of the Fortnite collective, right, which is generating a huge amount of money for Fortnite, the brand. But again, making decisions, making choices, voting as a group and a collective to say who's the next artist should come and do a concert in the space or this or that, it's more like instead of a decentralized autonomous organization, it's more like a decentralized autonomous corporation. Right?
Yeah.
The people are around the world making input that then somebody is making decisions, yes or no. I'm good with that. And I think that it was actually something that when DAOs were being formed, those were the two options of where they would go.
Yeah.
And most people went to DAOs because it felt more crypto. And I'm wondering if it still feels crypto enough.
That's interesting. I mean, we'll explore that over the next 2 days, over the next 2 hours. So we talked about gaming. We talked a little. We brought the DAO.
can monetize directly in-app.
But it's honest work.
Welcome back to CoinDesk Live. We are coming to you from behind the scenes at the Avalanche Summit in London. Joining Sam and I now is Codebase Director Michael Martin. Michael, welcome.
Yeah, nice to see you.
All right, we're just getting the day kicked off here. What are you looking forward to?
I'm looking forward to meeting all of the folks who I have only met through Google Meet. So, very basic, but I'm excited particularly to see how tall everyone is.
It's kind of shocking, when you see people IRL.
Turns out we have a very tall team. But no, other than that, I've got a lot of folks that, yes, I chat with on a regular basis who are international. I work very closely with a bunch of early stage builders, so folks who are, let's say, downstream of our more developer ecosystem, but perhaps not yet ready to be funded. So I'm looking forward to seeing them.
Let's talk about them. So Codebase is the official Avalanche Incubator, built to support leading Web3 founders. Season 4 just opened. What kind of folks are you looking for?
Yeah, so this is our 4th season, as you mentioned. So we've had now 2 full cohorts. We're in our 3rd. So we've evolved it over time. I've effectively built a startup myself, which is great and fun. So pivoting, iterating, etc. This time, we are going a little bit further upstream. So we're looking for folks particularly who are having a working demo and then up to pre-product market fit. Our goal with this cohort, and this is based on some of our learnings, is really diving deep into go-to-market strategy, sales development, etc. Typically, we find the most success with people who are working on B2B, enterprise, B2C, and ultimately our founders are the founder DNA is probably our biggest piece. So really looking for founder market fit.
What would you say, this is your 4th cohort you're recruiting for right now, and your first 3, did each one have its own personality?
Certainly, yeah.
And can you sort of tell us what those look like?
Yeah, and this really gets into kind of that evolving strategy. So our first one was let's try it all. So it was folks who had a nest, like a seedling of an idea up to, they had already raised, let's say, $500,000. And they were very much our beta case. I told them all of that. So they were very kind and supportive with feedback. Our second one, we tried to opt a little bit more tightly in terms of that post idea, but let's say pre-demo. And then we thought that was successful. The team's been great. They'll all be here. And now for this third one, we found a lot of success, I wouldn't say by accident, but very much by happenstance of they all ended up being around the same stage in their company life cycle, which was they have a working demo, and now they just need to really understand how do you develop a user persona? How do you think about actually talking to your customers versus building product? And where do you parallel track them? Do you overlap with them? And our team, just due to the nature of having such a large ecosystem, not only, of course, amongst those who are on Twitter and elsewhere, ideally CoinDesk as well. But also in our team, we have a lot of connections that we're able to leverage, and we found that that's been a really great value add for folks that they've been through the program. So we're going to keep kind of moving in that direction. But ultimately, the through line, however, has been that founder, let's say, determination. A lot of them have pivoted along the way, and we encourage it at that early stage. Like if it's not working, make a quick decision and go somewhere else. That's something that we probably will keep focusing on just by nature of the stage of the companies we work with.
Michael, when you think back to your previous seasons and you think about all of the founders who've participated in the programs, which ones stick out? I'm a sucker for a good story. Tell us one of the big success stories that sticks with you, that keeps you motivated for this season and the ones to come.
Yeah, certainly. So I'm always going to be partial to and will always highlight the company Inertia. Inertia Social. They're doing democratized prediction markets. So you can create your own prediction market with your friends around, who of your friends is going to get married first, let's say. Obviously, that's a little bit of a longer term prediction market, Ideally, whoever wins is probably paying for the bachelor party, but neither here nor there. I love that team. They were the winners of the first demo day. I've always enjoyed working with them. I have a very good, not only working relationship, but personal relationship with them. And they just came out of beta and launched their product last week, or no, not 2 weeks ago. And they're seeing really great retention on the product. Seeing a lot of fun stuff being prediction markets. As you can imagine, they're all currently crypto native, but I'm more of hey guys, let's do this on about reality TV, or let's do this about movies, or things along those lines. So I think their decision. So we'll see where it goes, but it's always fun to work with them and really be been able to be a part of their success. So there's a bunch of other companies who are similarly have launched, who are in progress in those launches and frankly raising capital. But I don't think capital raising is always going to be the measure of success in terms of the question that you asked, at least. I think working with them and really seeing where their vision started and where it is today, and actually seeing it go live and people use it's just really edifying.
So final question.
Sure.
You have 30 seconds. Tell us the 3 things you're going to tell this cohort that's going to set them up to be successful.
The 4th cohort upcoming.
Yes. 4th cohort, yes.
Yeah. What I want to see in applications, let's say, I want to see a working demo. I want to see something that is going to, actually be able to be touched and used and tested. I want to see people who actually know the people that they're selling to. And I mean very literally know them. Like ideally, if you're building something for healthcare, you should probably have worked in healthcare. And then lastly, I'd say just that founder determination, grit, et cetera. Like at the end of the day, it's really hard. And it's gonna kind of suck probably a lot of the time. You will be rewarded, but you got to stick with it.
Michael, thanks so much for joining us.
Thank you.
Thanks, Michael.
That was Aave Labs Codebase Director Michael Martin. We're going to take a quick break. We'll be right back. We are coming to you from behind the scenes at the Avalanche Summit in London. Joining us now for this special edition of Markets Daily is Galaxy Digital CEO of Europe, Leon Marshall. Leon.
Hey.
Great to have you.
Pleasure to be here.
We were just talking about your big week. You said it was one of the greatest days of your career last week. Talk to us about what happened and how you're feeling.
I mean, sure. I mean, it's not every day you get to wake up in the morning, go to NASDAQ and ring the bell. I'd say that, behind the stage, it's like extraordinary. You go behind the scenes, you get to see the whole build-up, the whole process. It was, truly a phenomenal day, not just on a personal career basis, but really for everyone at Galaxy.
Sam, have you rang the bell at the NASDAQ before?
I have not rang the bell. Looking forward to it.
Seems like one person is left out here.
Right.
You're left out. I'm interested, I think a lot about how, Mike, yourself, what the team has done through the trenches, right? Like there's a lot of time where people did not think we were going to get here in crypto. The last year has really been a transformational one in crypto. Right. So what did it feel like going from, we don't know if this thing's going to make it, to here we are ringing the bell at NASDAQ?
Yeah, listen, it's not like an overnight success. I think there's been a tremendous amount of work that's gone into that uplisting through the last, call it 4 years, right? The prior administration, it was, palpably harder to get things done. And I think having survived the various daggers that the crypto market has thrown at the firm for a long period of time, I think it's a testament, frankly, to the experience and the skill sets of everyone at the firm. Super exciting. And one of the things that Mike said when we were out there, and I sort of couldn't agree more, is that it's not the It's not the finish line. Actually, it sort of begins here. But one of the exciting things is to have access to the broad capital markets in a way that some of our competitors have had for some time will at least put us pari passu with them.
Well, let's talk about that a little bit. Sam and I, at the beginning of the show, were talking about legislation moving in the United States. We just heard that the Genius Act passed on the floor of the Senate. We were talking about how this industry is really watching the United States, but maybe do a little comparison and contrast for us between what's going on in the US, what's going on in Europe, and then more specifically, what's going on here in the UK.
Yeah, great question. So, I mean, there's a lot there.
Yeah.
I'm super excited to have seen the bill passed. I mean, that's also been in the works for some time and lays the groundwork for the market structure bill. What is super interesting now is that it lays the groundwork for the US to go one step further. And one of the things which I think a lot about is tokenized equities, for example. We're clear in our goal to eventually tokenize Galaxy and allow folks to trade Galaxy as well. What we saw in the past was a completely different regime. It wasn't clear what the taxonomies were. Broker-dealers couldn't really custody. There was a lot of confusion about the rules. I think now what we're beginning to see, and I saw Hester Pierce comment on this, is that you see the US actually looking to places like the UK, looking at the sandboxes that we have in the UK and thinking to themselves, how can we copy and look at something similar for the US? And so instead of penalizing folks that come to us and do disclosure, why don't we encourage it? And why don't we create an environment which is suitable for tokens and traditional securities? I think we're actually beginning to see that in the US, and I think that's super exciting.
Do you have any predictions of how the market structure bill is going to go?
I don't have predictions on where Bitcoin's going to go, let alone market structure bills. But what I will say is that it does seem like there is strong momentum behind the space now in a way that we haven't seen before. And so I remain hopeful. And even up until the last moment, there were some hiccups with the stablecoin bill. So who knows how it goes to the market structure bill, but I remain pretty optimistic.
Leon, thank you for joining us, and I'm sure we'll see you around the event.
Yeah, absolutely. Thank you for the invite.
That was Galaxy Digital Europe CEO, Leon Marshall. We're going to take a quick break. We'll be right back.
You can monetize directly in-app.
But it's honest work. Hey everyone, welcome back to CoinDesk Live. We are coming to you from behind the scenes at the Avalanche Summit, the premier gathering for visionaries shaping the future of blockchain and Web3. If you're just joining us, I'm Jen Sanasi here with Sam Ewan, and we were just talking to Leon. He's going to be on stage in just a few minutes. But Sam, you were asking Leon for a prediction on whether or not the market structure bill in the US is going to pass. And I want to tell you, I had a lot of conversations about this at Consensus.
Consensus. And while people are optimistic about stablecoin legislation passing, a lot of folks think that's going to happen before August recess because there are big financial institutions in the US, big banks who want this thing to pass. They are less optimistic about market structure happening, which kind of poses a problem for this industry. A lot of people are saying market structure is actually more important than stablecoin.
I think you're right. I think the stablecoin bill seems to be one that starts the ball rolling down the hill. And I think we are all seeing, we've been seeing for the last 2 weeks, stablecoin conversation is increasing. We are seeing more and more stablecoin usage. I think we're closing in on $300 billion in usage. This is going to be such a big industry for us. We know that. And it's one that feels a little easier because it is just dollar for dollar. And we know that digital dollars can move at the speed of light, where physical dollars can't. And so there's a lot of opportunity there, I think, there. I think when we look at FIT 21 and the market structure bill, I think people are then going to have to put sort of their money where their mouth is, right? And I think that's where we get to have the politicians on record to really having to represent their states. And what does it mean to allow digital assets to be a core part of what's happening in America? And that, to me, sounds like it's a scary thing for some of these politicians. So even though we heard from some of really the biggest voices in the crypto space when we were together last week about the market structure bill and their excitement for it, I think all of them, to your point, acknowledge that there are a lot of challenges. What do you think is, if you have any thoughts, what's a hurdle one has to get over psychologically to be able to support the market structure bill?
Well, I want to come back and talk about the market structure bill just for our audience for a second. One of the big things in this market structure bill is it delineates responsibilities for the CFTC and the SEC. And as we know, as folks who've been covering the space for a long time, that line hasn't been drawn. It's been really unclear who is going to oversee what, who's going to regulate what is a security, what is a commodity. And this bill the draft bill really kind of outlines clear guidance for that. The problem here, if we don't get it, is that it's then left to the SEC and the CFTC to continue with this rulemaking without this guidance from legislation. And so, Sam, we could see ourselves back in a state that we were just a year ago, right? As leadership changes at the SEC and the CFTC, the next leadership at the SEC might not be as friendly towards crypto as this SEC is, and that can be changing. So it's super, super important. And because it's so important, I can see why that debate, that back and forth that's happening on the market structure bill is happening. And I am one of the people who is not optimistic that this is going to happen. We say we're so early in this industry so often. And I think with legislation, it's the same. We're so early in the industry. We're so early to crypto legislation. I think there's a lot more conversations that need to happen and a lot more debate.
Yes. And correct me if I'm wrong, but it sounds like the leadership structure right now at the CFTC is a bit in flux. And so the SEC, we now, we know who President Trump has put in place, but it sounds like with the CFTC, we're starting to sort of be like, all right, maybe we'll figure out the cast of characters in the next couple of months. And so it really creates, I think, a sense of unease because without knowing who the players are, it makes it even more challenging. Is that the right read on it?
That is the right read. And something else that's been kind of interesting, and we've been covering it on the regulatory show, is state regulators are also coming to the table with rulemaking. And so we have state regulators, we have the SEC, we have the CFTC. And so without this legislation, everyone's just kind of left doing their own thing. And it feels like just as murky as it did before.
So let's assume by August, as you're predicting, we get the stablecoin bill.
Yes.
Right? Just say that happens. Then all eyes focus on the next, the market structure bill. Do you believe that the stablecoin bill itself will start to allow certain activities within the crypto industry in the U.S. to start to ramp up?
I think so. I think, we haven't really seen a lot of challenges with stablecoins. You and I have talked to a lot of folks who operate in the stablecoin space. They operate under, I can give you an example, PayPal's PYUSD is issued by Paxos. Paxos is regulated in New York. And so, like, that's fine. So that's why I'm saying, stablecoin legislation is going to pass. It's going to be fine for everyone. Stablecoins are still happening right now as the legislation is being debated, but market structure is the very important one.
Yeah, I'm excited to see what happens. I also think that people are looking at U.S. as being so bullish crypto, but this is a brass tacks conversation where people have to kind of put their stake in the ground to say, which side of this do we want to be on, more open regulation, or are we going to create some rails? And it's been more challenging than we think, I think, to get enough people together.
Yeah. All right. We're going to pause that conversation there. I'm sure we're going to come back to stablecoins and legislation later on today. We're going to take a look at the main stage now with John Nahas.
Helium, which is a protocol for any telco experts out there, fantastic from a coordination standpoint, allowing telcos to cut costs by 75%. You have, obviously, MapleStory, which is perhaps the first publicly traded company to launch a token. It's a game that's been around for 20 years. It has 100 million users. It launched in Avalanche, and it's enhancing the user experience in meaningful ways. You have, obviously, BlackRock, which is a financial behemoth going in on treasuries and tapping into capital markets on-chain. So, again, the overlooked truth in all of this is that, and this is something that we believe at Inversion deeply, is every business will use crypto. In the same way that 20 years ago, we were making this distinction of there's an internet business and then there's a non-internet business. Well, the reality is that every business today uses the internet to stay competitive. And that's the same arc that we're going to have in this industry. I'll say it again, every business will use crypto in one way, shape, or form to remain competitive. And that will happen over the next 5, 10 years. And so, but again, I don't want to wait 12 years. I think we can do it today. And that's really the mission that we have at Inversion, which is we want to go and we will acquire a traditional business and transform it with crypto rails. Because I think that the issue that we have in crypto today is that it's not relatable to anyone. They all point to it and say it's only Bitcoin and meme coins, it's a casino. And I just got tired of that. And so what I want to do is you buy a traditional business, you make it vastly more efficient. And at that point, anyone looking outside in says, wait a minute, you took a business that had a 5% EBITDA margin and you took it to 15. Surely you must have done AI to do that. And the answer is going to be, no, I just did one thing. I replaced old infrastructure and used crypto rails to do that. And I think if we do that, it has so much impact, I think, for the industry where we're finally taken seriously. Because you can point to something and say, this is what we've been telling you all along. Crypto is the settlement layer of the internet. It's an expansion pack of what the internet allows us to do, transferring value in a faster, better, cheaper way. So what does this all mean concretely? So over the last 4 years, I've really spent a lot of time thinking about where can we do this today with the least amount of risk. There's a huge opportunity that we see to acquire telco businesses and lower costs. With Deepin, we turn a telco asset into a bank. Why a telco? Because you live with the customer 24/7. If you want to onboard 1 billion users, it's with mobile. And telco assets are really underproductive. There's really no reason why your mobile carrier can't be your bank when money's truly digital. And we believe that the opportunity to on-ramp people to transformational technology is not to try to convince them to come and create, a wallet and set up their own keys. It's really to go meet them where they are and where they're living 24/7. So by acquiring a mobile company at a great price, we're looking at an acquisition with 25 million users. At that point, we believe that we can onboard those users to use stablecoins. I grew up in Mexico. I can tell you everyone in Mexico wants to hold dollars in a bank account. And so the question is, why haven't they gone to, and why aren't they using stablecoins? And you do have some adoption of stablecoins. The problem is that every single user that comes to this industry goes through an exchange. And the reality is, not when you go to an exchange, when you go to Vegas, you're not thinking about your life savings or buying a life insurance product. And so naturally, we have a broken customer acquisition funnel as an industry. We're not going to onboard 1 billion users through an exchange. It's just unrealistic. So Why? Because, going back to that slide, we have a president that launches a meme coin. You have 1 million users register an account on an exchange, and then they buy Trump coin at $75, and then they wake up on Monday and Trump is at $15, and they hate this industry, and they leave. And I think we can do better than that. I think we are selling ourselves short as an industry if we are onboarding users through the casino. And I don't have a problem with exchanges. I think they serve their own purpose, and they've done fantastic work. But again, through this approach, crypto is invisible. The user never sees, never feels the crypto. They're, at the end of the day, using a mobile plan that is competitive. It is feature parity with their AT&T, Verizon, Vodafone plan. But we can do it better because we cut costs on the back end with Deepin. Not only that, that user then has access to credit and financial products in a faster, better, cheaper way. And so that's really the activation.
Welcome back to CoinDesk Live. We are coming to you from behind the scenes of the Avalanche Summit in London, the premier gathering for visionaries shaping the future of blockchain and Web3. I'm Jen Sanasi. Joining me now is CEO of Token Relations, Jacqueline Melinek, and General Counsel of Say Labs, Gerald Gallagher, also co-hosts of Crypto in America. Hey, guys.
Hey, how are you? Yeah, that's how we're working together, plus Eleanor Terrett. But
yeah.
I think there's only 3 seats, right?
There's only 3 seats here. I know we couldn't get it together to get all of you here, but Eleanor will be joining us tomorrow. So we can pick up on the conversation with Eleanor. We saw both of you recording your podcast at the desk in Consensus. So from Toronto to London, talk to us about what you're hoping to learn about the UK while you're here.
Yeah, I think that's a great question. And it's funny because we keep joking, we're like Crypto in America in London, the London edition. But I think there's a lot of connections between what's going on in the US and then the broader European market. I think England in its own sense is not necessarily, in the European side, but I kind of look at it as a broader movement there with like MiCA and everything going on and the way the UK plus the broader European region has approached things. And then from the American point of view, obviously there are a lot of Americans here, us included. How do we kind of think about creating better regulation and enforcement through better frameworks than what has previously been done in the past?
Yeah, so I'm mainly in it for the Sky Miles. So it's been going great so far. Yeah, no, I think it is really interesting. There was this period where after Brexit, the UK was trying to be really attractive and they have a different regulatory framework over there. And then the administration kind of switched. So, Andreessen famously kind of went over there and then ended up closing up shop. And they've been kind of crypto friendly. At the same time, they're being outside of MiCA. And so now we have the US actually trying to proactively regulate. So it's been this really interesting kind of back and forth on the legislative agenda. And I think it'll be interesting to see if the UK can actually achieve more integration with a system like MiCA. We saw Keir Starmer talk about the integration sort of post-Brexit, creating some of that youth travel and some of those other policies that came out over the last couple of weeks. And then obviously also trying to do a trade deal with the US. So we'll be very curious to see like how the UK adapts, to this new environment.
Talk to me a little bit about that. I want to dig a little bit deeper. Before you guys arrived here, we were talking about legislation in the United States really stealing the headlines now. But like you mentioned, MiCA and the UK have been thinking about this for a little bit longer. Do a little bit of compare and contrast for me. Is Europe still ahead? Is the US catching up?
Yeah, it's funny. So from like a fintech perspective, the UK and Europe have been historically ahead of the US for a long time. Like I remember coming here in the early 2000s and they already had the chips in the cards. People kind of forget about that. The US, we were still just swiping pieces of plastic. So they've been very forward on the technology side. But then on the regulatory side, I think Europe pushed out rules saying, let's get something good done, something not perfect, right? So they kind of carved out DeFi, some of the stables, staking kind of wasn't, really addressed in MiCA. The US has been focused on trying to get sort of everything done. And so right now we have good progress on market structure and stablecoins, actually passed, out of closure last night. So after some kerfuffle, in the previous couple weeks, but excited to see where that goes.
Jacqueline, I want to come back to you now, CEO of Token Relations, obviously co-hosting Crypto in America. Talk to me about the formation of the podcast. Why is it important for the three of you to kind of tell the story of crypto in the United States right now? And
It's a great question.
Yeah, talk to me a little bit about like also why you think like these stories weren't being told, or why you want to tell them in your way.
100%. And me and Gerald looked at each other because it is kind of like a funny story, but it also derives from just being a former reporter. I know how much misinformation is spread out there, and like there could be a headline or just like one soundbite, and suddenly that's the whole story, and that's not the truth always, as we know. And I felt like there was a lot of conversation happening in DC, policymakers wanting to get things across, and people weren't actually truly understanding what was happening. And that's not their fault. They're not legal experts, they're not policymakers, and they're not founders building in America or trying to come back. So we're bringing on these experts to make sense of what's really happening in the space. And then Gerald, of course, is a very good legal expert that we have on the show. And then me and Eleanor, we have different reporter backgrounds. We come at it from different lenses. I have my own company too. And I'm thinking of it as someone building in America. What does that future look like? So.
Yeah, I think the timing of the podcast obviously was really good, just because we had all this momentum. So I've been in DC basically since about 2021, and it was a really depressing place to be in the industry for several years. There was kind of a big lack of momentum. But then the timing of the podcast, obviously we started having a legislative movement, but the crypto audience doesn't really watch C-SPAN, right? And so legislators don't always know how to talk to the industry, and then also I think, the interactions previously with whether it was Congress or heads of policy or people like that, they kind of spoke a different language than kind of the crypto native folks. So just really like bridging that gap, and then obviously having two great co-hosts and just getting to kind of hang out has been fun for me.
Thanks, Gerald.
It's always important to big up your co-host. Talk to me about that shift that you witnessed in DC. I mean, we had the White House Summit, we have SEC roundtables. It feels like discourse is really happening in a way that this industry has been begging for. But I mean, talk to me about witnessing that, especially in the position you have at Say Labs.
Yeah, so luckily, like as a layer one, Say as a protocol and Say Labs as an entity has been able to kind of sit back and watch some of the more complicated arguments sort of unfold over the last couple of years, right? We're not a wallet, we're not a stable coin, we're not a DEX, right? We're the infrastructure, and so from that perspective, I think seeing the shift is just really encouraging, just in the level of engagement, right? So if you look at, I think October 2023 was probably the most depressing time in sort of the history of crypto in DC. There was a summit, and they were also voting on the Speaker of the House. So I think they were on something like vote 14 or 15, and it was like, look, nothing is going to get done. You had Gary Gensler obviously kind of going on CNBC and just like shooting from the hip on who was getting, an enforcement action that day. There was a come in and register phase, that a lot of exchanges obviously had huge issues with because it was kind of a false premise. And so now I think like 180 is kind of an understatement. You have pro-crypto people in the administration. You have people like David Sachs, Bo Hines, trying to execute on this administration's agenda around crypto, which is just providing clear rules of the road, sort of catching up with the rest of fintech and the rest of the world on how they treat crypto. And you mentioned the task force. I think that's been really positive as well. So hopefully we'll get some actually signed into law progress here.
Jacqueline, did you want to say something?
No, you're good.
I want to come back to you. You have some episodes under your belt now. Anyone that stands out, or a pivotal moment where you thought like, wow, we're doing the right thing here, and what this person is saying is really helping me understand and helping the industry understand where we're going.
Yeah, I think we've had all amazing guests so far. Like we've been very fortunate to bring on some big hitters. Like we had Tom Emmer, Patrick McHenry. We just had Vlad from Robinhood, and kind of going off of Gerald's point about like what it was like in the past versus now. I think crypto in America could not have existed 1, 2, 3 years ago. Nobody would want to come on the show. Nobody would want. It would have been sad. It would have been just like a depressing like therapy session for everyone, honestly. And so many American founders at the time, like either were just putting their hands up and saying, you know what, fine, we'll get rid of crypto. Robinhood, they like lowered the amount of assets they were offering because they got like a Wells notice. And then there's also American founders who were not operating in the US, but were born and raised here, right? And so I think some of the conversations that we had with founders as well as policymakers, lawmakers on the show so far kind of points to like it's in this new age for crypto, and you no longer have to be like afraid to embrace it stateside, which is great.
All right, I want to draw on both of your expertise for all the builders who are here at the Avalanche Summit. I'm going to start with you. You come from a journalism background, right now working in comms. What's your advice for builders who are just getting their startup off the ground when it comes to communications?
Be very clear about what you're creating. And you could have your technical specialties and edge, but make sure that you're getting the message out there in a way that anyone can understand and explain why it matters. Like there's so many, L1s, there's so many bridges, there's so many protocols. Why are you different and important? Make that clear.
And Gerald, from a legal perspective, for folks who are building, maybe thinking about launching a token, what would you tell them?
Yeah, I think it was really interesting on the train up here. Actually, I was reading the CEO of Avalab's testimony before the House Financial Services Committee a couple years ago, and he made a very clear point to Jackie's point about, this is not about securities laws. This is not about, commerce. This is actually just about building the future of the internet, right? And anyone who's in sort of L1 land, anyone who's building kind of a real network, a utility token, needs to be very focused on how they're actually making the tech better, right? Because these arguments about how these assets are going to be treated and what you're doing, like you can build to purpose, or you can build general purpose. So, I think be optimistic about building in the US. I think take advantage of the momentum we have right now and, just engage and make progress.
All right, Gerald, Jacqueline, thanks for joining the show. We're now going to turn to the main stage where Anthony Scaramucci and Leon Marshall are in conversation.
Thank you for guys listening. My partner Gary, though, is in a little bit of trouble. I don't know if you guys are from Europe, but anyway, Gary Lineker is in a little bit of trouble right now. But
yeah, that's one I'm not going to comment on.
Yeah.
But
all right,
moving on fast. I just want to reiterate one thing. Super grateful for the invite to be here. I also want to reiterate the comments that the BD team at Avalanche has been extraordinary. I've worked with them personally over at Galaxy. I'll give a little spiel about what Galaxy is shortly, but super kudos to the team and thanks to John and everyone else for making this happen.
So before I begin my remarks, I want to congratulate Leon and the Galaxy team for the NASDAQ listing yesterday or on Friday.
Yeah, let's go.
And tell us a little bit about why that was important for you guys. What does it mean for Galaxy? How does it expand your ability to attract capital? How does it help the Avalanche ecosystem, et cetera?
Yeah, certainly. So for those who don't know, Galaxy, we used to describe ourselves as the Goldman Sachs of crypto. What we really are at the moment is we're a conglomerate. And we are at the intersection of the two most exciting trends in the space right now, which is crypto and AI. We got uplisted to the NASDAQ, and what that really means for us is that we now have the ability to access institutional capital in a way that we simply weren't before. And that's super exciting when we're working with protocols such as Avalanche, as we have done in the past, because what it means is that we can bring, as we currently do, institutional capital on-chain. So a lot of what Santi just mentioned, a lot of those dollars which are eventually converted to stablecoins and brought on-chain, they have to come from somewhere. And what I hear in my conversations day in, day out is from fund managers, real capital, finally looking at the space in a way that they haven't previously. We can talk about what has brought that about, but they're bringing capital that wasn't there previously on-chain. And I think that's how we get from, hundreds of thousands and millions of users to ultimately billions of users on-chain.
So I just want to make like 2 minutes of remarks, if that's cool, just because we're supposed to talk about the macro landscape. And if you guys are following this closely, these remarks are probably repetitive, but if you're not, I think this will be helpful. There's two big pieces of legislation in the United States that we're working on. One is the Stable Act, and the other one is the Genius Act. I don't know who came up with Stable Genius in the Trump world, but I mean, it's pretty ironic and fairly awesome, actually. But anyway,
I love that.
You have these two bills that I think are going to transform the space. And if you're not long Avalanche right now, and I know I'm not supposed to give investment advice, but let me just at least say the reason why I'm long Avalanche, because if you look through this legislation, and I'll make a prediction here on this stage that this stuff is going to get passed very quickly. If not immediately, it'll certainly get passed by the August recess. But if you believe what I believe, and guys like Robbie Mitchnick at BlackRock or somebody like Larry Fink believes, we are about to enter the age of tokenization. And this layer 1 technology is in the top tier in terms of its versatility, its flexibility. And I'll just say, somebody that's been on Wall Street now, this is my 40th year on Wall Street. And, you know, some of you can go yourselves because you weren't even born 40 years ago, but that's fine. But I would just say this to all of you, that when this happens, Avalanche is going to be a huge part of this. We are going to tokenize stocks, tokenize bonds, tokenize private equity firms, LPs. Avalanche is already a part of that with places like BlackRock and JP Morgan. But no one's really doing it until they can get the regulatory the categorization and the regulation resolved in the United States. And so that's going to happen. I sort of feel like this should have happened 3 or 4 years ago. That's fine. Gary Gensler's gone now. But the fact that it's going to happen in the next 3 or 4 months is very meaningful for this group.
So I think this is the crux of the matter. And there's a few things I want to make sure that we go through today, but one of those is clearly tokenization. I'm curious, when do you think we'll begin to see tokenized securities traded on blockchains in the way that we trade any other token through a wallet that we have?
So I'm of the belief it's going to happen a lot faster than other people. I think what's happened to us, we're like been browbeaten by the last administration, at least on the crypto front. And so people are like, it's never going to happen, or we're always going to have a very stiff headwind. But if you get this regulatory clarity, this is like 12 to 24 months away. You know, remember, Atkins went into the SEC, and a couple of my friends who I went to law school with are actually still at the SEC said he sent a message to everybody, we need to send out rules whether this legislation gets passed or not. And so you just have to think of the significance of that. They're going to provide guidelines, market-based guidelines, whether or not the legislation gets passed. And so the backdrop now is incredible. In 2004, George Bush passed this minor thing in tax reform. He basically said that the dividends would go from not the ordinary rate to 15%. And my staff and I looked at that and said, okay, we're going to buy all these dividend yielding stocks because it's going to, the government is going to push the market into those stocks. They were the best performing stocks for the next 2 years. And so the government has a huge impact on what we do. And so that regulatory clarity is coming. And I think it's going to come. I think people are going to be working on, we're going to be at an Avalanche Summit in 2 years. And people are like, yeah, you know, Goldman's on Avalanche, JP Morgan's on Avalanche. People are tokenizing their funds. You know, I mean, Skybridge is obviously working on fund tokenization, and we'll hopefully report back soon on our own situation.
Yeah, so at Galaxy, and you know, for those who don't know, you know, I run both of our global sales team, but I also run our Europe office. And one thing which I've noticed in Europe is the actual tokenization space in Europe is pretty advanced, and it's partly because of what happened over the pond. So maybe for those who don't know, taking a step back, if you wanted to issue a token in the US, there was significant lack of regulatory clarity. You didn't know if you were going to be sued, right? That was in the past. And if you then went to the SEC and said, okay, look, I'm going to disclose what I have, this is what we're going to do, they would potentially slap you with enforcement there and then and go, we got you. And so a lot of those founders went overseas, and a lot of the tokenization efforts that you see, frankly, in Europe and in the Middle East, were a lot of founders and funds who saw the sandbox and regulatory environments over here and thought they were attractive. What's great for the space, and in particular for the US, is that with a new set of folks who have come in, you know, Hester Pierce in particular, you've got to give a shout out to the incredible work that she's done, have said, look, that's insane. It can't be the case that broker-dealers, that we say, yeah, sure, register the broker-dealer, but by the way, you can't custody crypto assets or trade crypto assets. I mean, that's not a regulatory regime. And so a huge shout out to some of the folks in the US of saying, look, let's create safe harbors. And frankly speaking, Hester Peirce has looked at what we've done in the UK in the digital security sandbox and said, let's do something similar to that in the US. And what I found particularly interesting, and I think what is super meaningful for Avalanche, is that there are, conversations taking place, right? This has not happened certainly, but there are conversations taking place in the US right now where they're saying, look, let's have no action letters. Let's bring in folks and let that experimentation on chain happen here in the US. And we pretty much know that what happens in the US happens around the world. And I think what that means is that the blockchains that have set themselves up for that tokenization wave, and I think that wave is incoming right now, will do great. And I think Avalanche is a clear part of that story.
I'll give you this perspective. I want you to think like a 50.
Welcome back to CoinDesk Live. We are coming to you from the Avalanche Summit in London. We are now joined by Aave Labs CEO and founder, Emin Gün Sirer. Hello.
Hi, very nice to be here.
Nice to see you. I mean, the last time we saw you, we were in Buenos Aires. Now we are in London. Talk to us about the summit, going from Buenos Aires to London. What can folks expect over the next 2 days?
Well, we're throwing yet another big summit, and I think it's a big, well-known thing in the industry that Avalanche summits are a special mix of technical expertise and a festival atmosphere. So I'm super excited to be here. I think the vibes are immaculate outside. And we've assembled a great team of people who really are experts in their areas. And super thrilled to be here. Very nice crowd. And we'll be talking about all sorts of things, including highly technical talks about blockchain, scaling, scalability, speed, performance, etc., all the way to regulatory issues and everything in between.
We were walking in, a lot of people coming in, everyone was very excited. Feels very different in the countryside of London, which is very posh and beautifully manicured. And then you come and there's all these amazing developers and builders here. You're about to go on stage, give your keynote. Give us a little bit of a highlight. What are we going to hear on stage?
Sure. So I'll talk mostly about what brought us here. And, to summarize it, it's actually fairly simple. What brought us here is the best of science applied to blockchains. I used to be a professor at Cornell for about 19 years, and I left my tenured post there about 5 years ago to bring the best of science. I was sick and tired of seeing other projects constantly dangle shiny objects in front of masses and say there's something coming, there's something coming, there's something coming, with that thing never appearing. And so we decided to bring what we know best from distributed systems to this field, make high-speed, infinitely scalable chains practical. So that's what brought us here, and I'll talk a little bit about what's to come, what we're doing in the background. We recently shipped 2 major releases in the last 5 months. This is no small feat. Many other projects ship once every couple of years. So we have 2 big pushes, and those achieved enormous savings in terms of cost. So we now have the fastest, cheapest EVM out there. There's more to come. And I'll touch upon what we're doing with async execution, and I'll touch also upon what we're doing with a new database that speeds up cryptocurrencies and blockchains. Then I'll also give a glimpse of something we pioneered called coin-operated agents, which are these chains that are powered by validators equipped with LLMs. So imagine a chain where you, instead of writing Solidity code, instead of writing in a virtual machine bytecode, you are actually programming the chain by specifying what you want done in your own native tongue. So you simply say, I'd like to swap some coin for this coin for that coin. And you say it in English or Tagalog or what have you, whatever your language might be. And then the chain interprets what you want as if it's an executor in the sky without any tangled up conflicts of interest or anything of the kind that you would expect with an actual executor, with an actual human being that carries out that task. So those are some of the things that are coming up, and I'll touch upon those.
I got to ask you what the other professors at Cornell said when you were leaving your tenure to build in this space that was not as mature, I guess, 5 years ago.
That's a great question. So I actually got into this space in 2002. Let me go back to that. And
Dating yourself.
I know. I was a young professor. I built this magic cryptocurrency for Napster and LimeWire, actually, because people were not uploading files. They were just solely downloading. And I thought, hey, this is an economic system. We need to give incentives. And back then they said, stop working in this area. This is not a good area. You'll never get federal funding. Everybody's freaked out about 9/11 and terrorist financing, and you'll just face nothing but difficulty. And I abandoned the area back in 2003 because of their advice. But my mentors simply point blank told me, don't work in this area. And then, of course, it blew up. And then I got back into it, did all the work on selfish mining, etc., on Bitcoin. And when I was leaving my tenured post, they were like, are you crazy? You know, what's going on? And I was like, look, anyone can see that this is the next point in the evolution of large-scale distributed systems. They will only get more complicated. They will only get more autonomous. They will only get more decentralized. And they need the science behind them to get to the next level. And I need to be doing this because nobody else will.
What's so interesting about that is you're also, in many respects, you are the people who are out in the audience right now. You're taking a risk at a time when your career was solid, right? You had tenure, you had a stable career, and you said, I want to do something bigger. I want to do something better. I want to own the opportunity that is in front of me. And I feel like we are chock full of folks in the main tents right now, watching, we're seeing Scaramucci on stage right now, but getting inspired to say, how can I build my future out of this? The last year has been a tremendous one for Avalanche, and I think that people really comment about, I think, speed, efficiency, but also how supported they are by the team within Ava Labs. So is there a mantra, a special sauce that you guys bring to your team about how you support these builders?
That's a great question. I don't know what I did right. So, I wish I could enunciate what it was, but somehow we found ourselves in a position where our reputation is that we take projects to completion. We ensure their success to the best of our ability. We're not announcement machines, we deliver. I think it comes from that initial ethos of always delivering working code. It also comes from the people involved. I think the initial people that assembled around us is a very, very young, very energetic crowd, and they're just really dedicated to what they do, and it's really them that I'm super proud of, and together we built this community. And now, once you reach a certain critical size, that community starts supporting itself and each other. So yeah, I don't think there's anything that I can say here other than I was the initial seed, maybe, but really it's everybody else's efforts that's responsible for that success. I can't take any credit for it.
You mentioned the upgrades that you're going to talk about in your keynote, making the chain faster, cheaper. I know there's a big push for institutions. Sam and I were talking about the games and the gaming companies that you're partnering with over at Ava Labs. Talk to us about how those upgrades are helping you in these conversations to bring names like MapleStory and some of the big financial institutions over into the Avalanche ecosystem.
So yeah, we've had great success with some really demanding use cases. Gaming is at the very forefront of this because if you look at a game like Off the Grid, where you live in this futuristic universe, everybody's gotten their arms cut off, their legs cut off, they have their mech arms and legs, and you're killing people and stealing their arms and legs and ammo and guns. Every one of those operations is an NFT transfer behind the scenes. You got to be so fast for that to be seamless. And if you've played this game, you know how beautiful, how smooth it is. And that's entirely because it's powered by Avalanche Consensus in the background. So that success, that one big game, it's a AAA game, it's a real game, and it's not about the coin, it's not about getting rich quick, it's really about having a great experience. Having assured the success of that one game brought us the rest of the community that says, hey, I want to tap into this, I want to build an open system, I want other people to build economies on my system, and I want my coin to power my game, and I want the game to be usable as well. So all of those people came on to us. At the same time, our success with institutional players is entirely different. I think it's mostly because we made the critical choice to go to New York City. We're a very American company, and we went to the most regulated spot in the universe, like literally the most regulated square of land anywhere on Earth. And instead of going to, we don't see this as a technical play. That stage is over. Like, it's not crypto, shiny objects, little crypto gadgets, etc. Greek letters. That's not going to win the game. I, as a professor, know all about the Greek letters. I've run out of alphabets writing papers. I've had to use fonts from other languages. So, but no, that's not going to win the game. So we're not in San Francisco. We're not a San Francisco company because this is not a tech play anymore. We're not in a tax haven because we're not about selling coin. We're about building stuff for the digitization of economies. And so we went to New York City for that reason, and it's those connections that got us all of those institutional efforts that we're very proud of. We're building a lot of walled gardens for a lot of highly regulated consortia and highly regulated asset managers who want to digitize their assets.
And I think what I really love about what you're saying is whether it's a in-game economy, whether it's a TradFi system that wants to understand digital assets, whether it's supply chain, all of these are micro digital economies that need their own rule sets, they need their own technology to survive, and they need to use a best-in-breed platform. And it sounds like what you're really talking about and what this whole event is satisfying all of those needs and knowing that you have the flexibility to deliver on all of that. Is that correct?
That's right. That's exactly right. I think our mantra when starting out was digitizing the world's assets. And there are trillions and trillions of assets out there. All of them want to be digital. Name an asset that you don't want to be digital. And name an asset that you don't want to be able to trade with anyone on earth. There isn't. Everything we own will one day be on chain. And there's only one architecture and there's only one system that can absorb that growth. And I'm super proud to have seen that opportunity and have the technological foundation to support it.
Emin, thanks so much for joining us and good luck with that keynote later.
Thank you so much.
That was Avalab CEO and founder Emin Gün-Sturer. We are going to take a quick break. More programming in just a minute. Hello and welcome back to CoinDesk Live. We are coming to you from London, where the Avalanche Summit is underway. We are at the Hatfield House, where top visionaries in Web3 are gathering to share ideas, alpha, and insights. Our next guest is the Executive Director of Growth at Kexus Digital Assets, Nikhil B. Sharma. Nikhil, welcome.
Thanks for having me here.
Thanks for being here. Now, we are behind the scenes at the Avalanche Summit. You are at Kexus. For our audience at home who doesn't know, Kexus is Onyx rebranded. Talk to us a little bit about that rebrand that happened last year, what that means for how JP Morgan is looking at blockchain infrastructure moving forward.
So the rebrand actually happened in November, right? And for all of you who know Onyx from the past, nothing much has really changed in terms of our structure, in terms of our vision, and in terms of the solutions that we offer. We continue to kind of help our clients move money and move settlements faster with a lot more certainty, with a lot more control. We're still in the same structure within the firm. We still sit within our payments unit. But we align really well with the firm in terms of how we work together with our other business lines. So there are solutions within the platform that I oversee. Kexus Digital Asset, I oversee growth for the platform. So we have solutions where our markets business, our security services business, our payments business, all coming together and like offering solutions to clients where we can do repos for as short as 30 minutes. So it almost works very seamlessly within the firm. Kexus, the name, basically comes from kinetic energy and connections. a lot of kinetic energy that we are seeing this year, like from the start of the year, and hopefully that's going to give us tailwinds as we go through.
Nikhil, I'm interested in what questions you're getting from clients. JP Morgan, one of the largest financial institutions in the world, cannot not be getting those questions from your clients. How do we participate in this ecosystem? So what is your answer when they ask that?
So they're already participating in the ecosystem, although in a gated community. So we are a private permission network today. That's what we've been in for the past 4 years. But that's not really precluded us from sort of doing experiments with even Avalanche. So we've done 2 experiments with them in the last 2 years in terms of testing out model portfolios when we did in like 2023. And 2024, where we tested out like Aave V4, the privacy solution with Ava Cloud. So these are almost steps in what we see as our end state vision. So we almost see Kexus digital assets as being that entry point into that ecosystem. So it provides like this secure institutional grade entry point into an ecosystem that we would connect to. Obviously, that would happen in an incremental stage, the way it happens for banks. That's our answer. And they are convinced with that, which is why we see volumes on the platform.
We were just talking about institutions in the Avalanche ecosystem with Emin a few seconds ago. Talk to me about why you're here at the Avalanche Summit. How are you looking at the Avalanche ecosystem?
So we look at Avalanche ecosystem through our own prisms, right? And those prisms come from the experiments that we've done with the Ava Labs team, the Ava Cloud team across 2 years. So our first experiment was 2 years ago, like end of 2023. Where we tested out fund tokenization and how funds sort of sit in model portfolios, and we did it cross-chain. Again, this goes back to the question that you asked in terms of how do we're doing like a bunch of things in our own backyard, how do we connect with ledgers that are outside of our backyard, which is what we tested out. And again, for becoming a general availability product, there are several sort of layers that we will need to kind of pair through. But then that's when we started out our first sort of journey with Avalanche. Morgan is an ally. We do work with, talk to her like quite often in terms of like what we can prove out. What that led to is our second sort of experiment at the end of last year, where we tested out a privacy solution, Aave V4, Ava Cloud, where we were testing out a bunch of privacy solutions in line with our thesis in terms of if this were to go, if our solutions were to sort of extend into universal ledgers, there are some things that need to be ironed out. So then we tested out Aave V4 as one of the solutions. So that's sort of how we look at the Avalanche ecosystem now, in terms of coming at it from our own theses, in terms of where our products would play, how our products would play in certain sort of markets, certain ecosystems, and where Avalanche could sort of collaborate with us.
When you think about the financial opportunities of digital assets at speed and at scale, we all know that we are playing in more digital money today than we were yesterday. Yep. We are going to be only playing in the future and even more. When we think of the world as in the global nature that it is, I can imagine yourself saying there is so much opportunity out there as we bring more and more people into kind of creating this financial inclusion opportunity.
Yeah.
Do you think that happens on chain? Do you think it happens in branch? What's your thesis on utilizing digital assets for tomorrow's generation, the younger ones coming in, those who may not traditionally have had bank accounts?
Yeah. And when you say, does it happen on branch, just to be clear, you mean like physical branches?
Or within a JP Morgan framework.
Yeah, I mean, like we definitely have a view in terms of how it happens on like single ledgers, multiple ledgers, and universal ledgers. And we think it's an incremental journey in terms of where we are and how we get to that stage. That said, like we have done experiments on like universal ledgers as well in terms of what it takes to kind of do a real transaction for the new generation, in terms of what it would take if they were to transact real value on universal ledgers. So this is going back to 2022, when, again, in a bank construct, I'm not talking about like retail bank accounts here, but within like an institutional construct where our bank is trading with a counterparty, we did a trade on a blockchain which was live on a DeFi protocol. So that's where we sort of realized as to what really works, what really doesn't. So for anything where we would have to put something on a universal ledger, we would have to kind of put those gates, those filters in place, governance in place, to kind of do a trade which is in compliance with how we would have a product going out within the traditional JP Morgan infrastructure. So the way I would see it is like we definitely believe in the technology, and this comes top down, not because I have an axe to grind here. Yeah. So this comes top down in terms of like the vision, in terms of the fact that this technology can help the ecosystem, in terms of how we expand it to the aspects that you said. that would really depend on use cases, what we can enable, and at what scale.
I want to come back to the privacy conversation for just a second. You're talking about the experiment you did with Aave Cloud, and I'd just love to hear from an institutional perspective, what are the privacy concerns, even in these walled gardens we're talking about, right? Because what we're talking about is a little bit different than when we're talking to DeFi protocols, when we're talking to degens. Privacy is obviously a concern in those use cases, but I believe in a different way. Talk to us about how institutions are looking at privacy and what's important to them as they experiment with blockchain infrastructure.
Yeah, great question. So when we started out with our journey of like why we're looking at privacy, this was somewhere in the mid-2024 when we started looking at many institutions sort of jumping into the fray, and we started looking at tokenized sort of wrapper products coming on chain. When you go on to tokenized wrapper products, you can basically see the investor register right there. And if you had like good sleuthing skills, you can basically go back and see guesstimate, not actually assign it to, but you can guesstimate as to who that address could belong to, what they've done in the past, etc. So when we look at that and like look at it in parallel to what happens in the traditional infrastructure, there's sort of 4 prisms that institutions sort of look at from a privacy confidentiality standpoint. So the one is anonymity, where my personally identifiable information should not be on chain. Still not on chain, but you can sleuth enough to kind of see what actions have taken place from that address, who's being funded by, etc. Then there's confidentiality, which is my transaction balances, my ownership, my transaction record shouldn't be in a place where I can actually put it through an LLM or whatever and like gauge what the patterns are. Then selective disclosure in terms of how I want to share my information, that should be up to me. Like I don't want to share all my information. I can share a part of my information and prove to you who I am. And then auditability. Like if I want to like open up a part of my like transaction information for you to be able to audit, I should be able to give you that authorization in like a selective way. I don't want to open it up to everybody. At the same time, I don't want to be very closed in terms of nobody can see it. So that's sort of what institutions look at. So when we started looking at privacy, we sort of started with the thesis that enterprise grade privacy, identity, and composability, which is what Project EPIC stands for, that would need to be on chain for institutional flows to be comfortable to kind of come onto a public permissionless chain. We started with the thesis and we sort of ended with that conclusion that there is no one size fits all. There are several solutions. AVC is one of them. We did look at them and we liked it in terms of like among the other solutions which we liked as well. We liked AVC as well because it ticked some of the boxes that we were looking at. Like how do you bring in privacy preserving digital identity and how do you sort of connect it with like business flows? So the way we did it, we basically plugged into institutional flows. How does a fund subscription work? How does the entire flow work in terms of an investor interacting with a fund? And then we looked at all of these solutions and how they sort of plug in. That's what we did. That was our collaboration.
All right, Nikhil, we are going to have to leave it there. Thank you for joining us backstage at the Avalanche Summit, and I'm sure we'll see you around the event.
Thanks for having me here.
Awesome. Yep. That was the Executive Director of Growth at Kexus Digital Assets, Nikhil B. Sharma. Now, we are going to head off to the main stage here at the Avalanche Summit in London, where Jacqueline Melinek, who was just here backstage with us, is joined in conversation by Stani Kulichov.
And essentially, it is the latest architectural upgrade proposal, which you've described as a generational upgrade. Do you want to talk more about that and why now?
Yeah, I mean, kind of a good context is, you know, how we got here. So obviously, Aave is a very unique project in the sense that we started it very early in 2017 as of ETHLend, focusing on peer-to-peer lending, and later converted it into more of a pooled model where you can supply different kinds of assets, stablecoins, for example, earn yield, and borrow against liquidity. And I think kind of like a big momentum for the whole DeFi space was 2020 when we launched the Aave V1, when it was still COVID, and you know, the macroeconomy was in a state where pretty much the economy wasn't moving and interest rates were extremely low at the moment. And a lot of users were trying to find ways of finding yield. So DeFi at that point was kind of like an attractive alternative way of preserving capital in a very extreme environment of COVID. and then DeFi Summer came in and really showed that you can actually decentralize some of these protocols that are financial infrastructure, and that people should be able to own them and participate in open governance and have a saying. And I think now in 2025, Aave has been growing substantially. We had the best year so far last year. And I think what's been really remarkable is that when we started building Aave, there was a lot of centralized lenders out there, and we couldn't compete with our path because we chose to build something that is non-custodial, resilient, fully on smart contracts. So the speed that you can move is very slow. And now looking at the lending space, it seems like a lot of the lending has moved from the centralized businesses directly to on-chain. And I think that's a really exciting progress. And now what we're trying to figure out is that how do you take this on-chain lending activity and scale it to the mainstream, to institutions and to consumers, but doing it in a way where you benefit from the DeFi liquidity network effects. And that's what V4 is all about, is introducing a new architecture of liquidity hubs and liquidity spokes where you can segregate risk very granularly depending on different types of use cases, but at the same time you benefit from the liquidity network effects that Aave, for example, provides today, where you can supply assets into the same pool and have instant liquidity. As of example, Aave is the only place where you can actually borrow billions worth of stablecoin liquidity with one transaction as long as you post a collateral. So it's simply a innovation towards a direction where we take the best things that exist in DeFi, the ability to pull liquidity in a very permissionless way and have these benefits, and doing it in a safe way where you have risk segregation.
You said the best things in DeFi. What would you define that as today in the existing market? And you mentioned last year that Aave also had its best year yet. Do you think this V4 will kind of propel it even further this year and so on?
Well, the launch obviously is going to be very controlled because when we produce technology, we want to ensure that it's safe and secure. And that's what the Aave brand stands for, of actually having people behind of the technology that care about the safety. And I think that's really important. But in general, we build for everyone in the sense that we think that DeFi will be used by every person on Earth. And DeFi is just a perfect place for having financial algorithms and financial opportunities that can be distributed globally. So I do think that there's going to be a lot of growth, and I think that DeFi is growing also because it has proven itself, and there's very good regulatory tailwind at the moment that has been really helpful. The banks are more open to work with on-ramps, and getting access to DeFi is becoming more easier, and there's a lot of institutional demand at the moment. And I think this whole concept of tokenizations and RWAs are really important because that actually creates the demand side. So if you can use traditional assets as a collateral and you create a interest rate market against these assets, and that creates demand, and that creates a bigger yield market to be distributed across globally.
And then thinking about the unified liquidity hub that the V4 would enable, how do you kind of see that playing a role to unlock more for borrowers and lenders on the other side across chains like Avalanche and then other ones as well?
Yeah, the new model is maybe that good analogy is kind of having like a central bank that is issuing, which is the liquidity hub, that is issuing credit to these liquidity spokes, which are more of like commercial banks. So a spoke is simply a lending, or let's say like a borrow configuration of various different assets and different risk parameters, Oracle configurations that you can attach to a liquidity hub. And then a liquidity hub can actually decide to allocate liquidity. And Liquidity Hub has a governor, so that can be Aave DAO, or that can be an external governance contract sharing economics with the Aave DAO. So it's a way of actually creating and innovating something new. So if you're a developer and you have some interesting ideas in DeFi that you want to build, one of the biggest challenge at the moment is that once you build and innovate, how do you actually grow and get liquidity? So typically what DeFi teams do, they go and contract liquidity. So they go and rent the liquidity out, which has a cost, or they have to somehow partner or market their product. But with these spokes, what you can actually do, you can build something really cool and request a credit line from the Aave DAO, from the Liquidity Hub, and get instant liquidity directly seeded into that innovation. And it can be just some interesting collateral asset and borrowing configuration. That can be also a RWA collaterals or something completely new as well.
I also want to talk to you about stablecoins. That's an extremely well-made or well-fit product market fit within the industry right now. I know last year we talked about stablecoins and payments and everything else that's happening within the ecosystem, but a lot of things have changed since then. How do you kind of anticipate stablecoins playing a role in the broader DeFi infrastructure landscape, and as well as Aave's native stablecoin in this new V4? Do you kind of see it changing the way we think about payments and cross-border relationships, or what's like the next step here?
Yeah, I think stablecoins, I mean, it provides really interesting utility, right? It creates the stability that you need in a decentralized system that doesn't talk to outside world, right? And I think a really beneficial use case of stablecoin is actually accessing DeFi yield. And to explain what I'm trying to say is that stability means a lot in countries where there's economical instability. So, for example, that's Argentina, certain parts of Africa, Asia, and Middle East. But one thing that is really hard for stablecoins to sell is in the Western world, the stability, because the banking system works pretty well. It gets optimized. It's not what we really want. Obviously, we want a better system, and that's why we're here. And that's what we think that DeFi and blockchains can provide. But really big value proposition in the Western world, in US and Europe, is that stablecoins can give you access to that DeFi yield. And that's the kind of like a tool that you actually need. And that's what we are also betting on. So at Aave, we've reached kind of like the I would not say we reached the maxima of DeFi. It's the biggest DeFi protocol, but there's still scaling that we can do on the DeFi user base, adding new interesting assets like RWAs and so forth. But what we're truly interested in actually taking this yield that we have and giving it to people around the world. So how do we get to that consumer adoption and also package that yield for institutions as well? Aave native stablecoin is very fascinating because it is a decentralized alternative, and that has certain type of value. But at the same time, it creates an interesting revenue stream for the Aave DAO. So 1 billion worth of USDC borrowed, actually 100 million worth of Go creates the equal amount of revenue to the Aave DAO. And that excess revenue can be actually used to create higher interest rates for users. And looking at historically speaking, since inception, Aave has been able, and DeFi in general has been able to beat.
Welcome back to CoinDesk Live. We are coming to you from the Avalanche Summit, which is happening right now in London. I'm Jen Sanasi, here with my co-host Sam Ewan, and we are coming to you from behind the scenes. We are bringing you candid conversations from speakers right here backstage before they head out on to the 3 stages out there. Now, our next speaker has been emceeing the main stage. Lavinia Osborne joins us now. She is the founder of Women Blockchain Talks. Hello.
Hi, Jen. Hi, Sam.
Hello.
How's it been out there?
Oh, it's been awesome. It's the vibe is vibing, the stage is set, everybody's ready, and I'm ready, which is, key.
What are you expecting to get out of this next couple of days?
smooth operations, some good learning. I mean, I've already picked up some really interesting insights already about how the market is moving, how the market is developing, how it has developed. Interestingly enough, I was MC for the Barcelona Summit 2 years ago, and just from that point to now, I can see all the developments in Avalanche. There was a speaker, our first speaker of the morning, he was just talking about how to onboard 1 billion users, and the strategy that he's looking to utilize or is implementing even is to purchase traditional businesses that have a big user base and onboard them, you know? And I thought, that's a really cool idea, and that is a really great way to show how this technology is business orientated rather than just finance orientated.
We've had a lot of the speakers here sitting in these chairs talking to us. We were just listening to Stani Kulishov on stage. We saw the Mooch on stage earlier. Can you pick out some of those insights that you've gained throughout the day that are sticking with your head as you go into the afternoon?
Yeah, sure. The key thing I would say I'm taking away from this is just the community, and we all know that blockchain is built on community, and the community at Avalanche is strong. You know, just the players, the supporters, the adopters, and advocates even. The main stage, the audience is full. You know, there's no seats. People are standing at the back. And so what I'm taking away from it is that Avalanche has grown so much in the last 5 years. And of course, it's based on the community, and it will continue to grow because of that community. And John was just talking about, you know, he's looking forward to engaging with the builders who are creating their businesses on Avalanche and doing more summits and integrating them as we move forward. So I really, for me, community is everything. That's how Women in Blockchain talks. You know, that's what I've built it on. That's the foundation. So to see a blockchain, you know, a protocol such as Avalanche just promoting that really stands out for me.
I think what's always interesting is to think that I don't think a lot of people think of blockchains as being true operating systems. And I think what you just said about you know, the first speaker talking about getting to 1 billion users through existing businesses versus having to build new, to me is the equivalent of, oh, well, we want to switch from Microsoft to Apple, right? And there's products that exist, and we should just make better products, and people will come. I also think about the idea, you know, you talk about financial opportunities, but business opportunities. And then you also spend a lot of time, I think, in the cultural side of bringing more people into our space. And all of those need operating systems, right? They all need the opportunity for someone to be able to come in and say, oh, I have an idea. I can make this happen, and I can build on top of this. And to your point earlier, that there is a vibrant community that is coming. So what do you think makes the Avalanche community itself so special?
What I believe makes the Avalanche community special is that one of the things that I took away from the talk was that there was a gentleman who helped build Algorand, and he's now with Avalanche. And so Avalanche, you know, all the blockchains and the different protocols, they're all distinctive, and they bring different things. And you will see some of the players who was in one protocol move to another protocol. And I think what makes Avalanche special is, of course, its builders. Technically, I can't talk about the differences, if I'm honest with you, and the leadership. It always boils down to leadership, and our leaders are visionary. And we're not just looking at, you know, how many people we can onboard, but it's about the quality of the individuals or the products or the build that we want to build within Avalanche. So that's what I would say would make it distinctive. The leadership and the quality versus quantity.
I want to pull on your background for a second. You know, you really spend your time championing diversity in Web3, right? Championing equity and inclusion. Talk to me about being at an event like this. What should ecosystems like Avalanche be thinking about when it comes to diversity and when it comes to inclusion in their ecosystems and at events like this one?
Well, I think Avalanche are doing it already, just from the conversations that I've had with the team and a focus on, you know, spotlighting and bringing in more women. And also, I know there is a focus, or there is a individual who works specifically with universities to bring in young ideas, because when we think of universities, we always think of young people, but it doesn't always have to be young people. You can have, mature students doing their PhD, doing their masters, etc., etc. So in my mind, I think Avalanche is doing that in regards to the outreach. People are not going to know what they don't know, and so it's up to the actual protocols and Avalanche to go out there and to talk to people so that they know it exists and what they can do with it. And there's things that I want to do with Avalanche in regards to my community, and there's conversations being had around that. And so again, it's about me being in this space, knowing who is who, and being able to bring that information back to my community, and also the outreach programs that I do, because people just don't know what they don't know. And I think with that in mind, that is how you create inclusion and diversity, and most importantly, equity.
And we spent time with Emin, we spent time with John Woo, we know Stani. It sounds like, to your point, the leadership is very open to trying to look at the best ideas can come from anybody, and how do we make sure that that's the case, which doesn't always feel like all crypto looks at it that way.
Yeah.
I'm interested, I'm going out on a limb here, but I'm hearing from your accent that you're British.
Yes.
And you mentioned being in Barcelona 2 years ago, which was a fantastic event.
Yeah.
Now we're here in London.
Yes.
What is also the culture of UK crypto these days?
Mm-hmm. I would say that the crypto space in London or in the UK, okay, first of all, it's quite London-centric.
Okay.
And so I do my best to bring the message, the knowledge, information around what is happening in the blockchain crypto space to different regional parts. Brighton is a growing community. You got Manchester, there's different blockchain associations regionally opening up. And I love to see it, because again, you can't talk about inclusion and diversity and not be including the whole of a country or the whole of the world, the geographical elements or parts of the world. So I have to talk about London though, because that is where the kind of crux of the blockchain crypto, and it is vibrant. I mean, London has that foundational finance space, legacy banks, strong fintech background. Fintech started in the UK. And so off the back of that, crypto is a strong element, digital assets. And I feel like when it comes to the law, we're leading in regards to how we look at, for example, disputes, crypto disputes. We're leading in that element. But what we're falling down on is the regulations and the compliance area. Not because we don't have the compliance and regulation, but it's quite strong, it's quite restrictive. And I personally believe a part of that is because there is such a legacy, a financial legacy structure. To change all of that is very, very difficult. It's going to take time. It means eradicating laws that have already existed. So it's a question of developing it slowly with the laws that already exist. And we are doing that, but it's taken time. And I just say that because when I go to Dubai, the UAE, and what I see there is forward thinking, a lot of motion, a lot of growth, a lot of adapting, where innovation is not being suppressed. And that's the issue with compliance and regulation. Right? You want to protect the people, but you also don't want to suppress innovation.
All right, Lavinia, we are going to have to leave it there. Thank you so much for taking time out of your very, very busy schedule here at the Avalanche Summit to join us backstage.
Thank you for having me.
Thank you.
That was Women in Blockchain Talks founder and CEO Lavinia Osborne. Now, if you're just joining us, we are coming to you live from the Avalanche Summit in London. It's just getting kicked off today. We're going to be here for a little bit longer, and we'll also be back tomorrow. We are going to take a quick break. When we come back, one of my favorite CoinDeskers joins us right here.
can monetize directly in-app.
But it's honest work.
Welcome back. We are coming to you live from the Avalanche Summit in London, their premier gathering for visionaries shaping the future of blockchain and Web3. I'm joined by Sam Ewan and CoinDesk's managing editor for features and opinion, Ben Schiller. Hello, Ben.
Good morning. Good morning. Good to be here.
Now, we are in the UK.
Yeah.
We were just in Toronto. Talk to us about what you're hoping to learn about UK crypto over the next 2 days.
Well, I'm from the UK as well, so it's quite interesting to be back here. And it's quite different from Toronto, isn't it? I mean, Toronto was this huge cavernous convention centre, and this is like a little stately home and north of London. It's kind of built in the 1600s or something.
You say little. We heard that there's an event this weekend that's going to have 23,000 people here.
Is this little in London standard?
So,
well, there are bigger houses in this. Like there are some, like Blenheim Palace, for instance. That's Winston Churchill's place, which is near my mum's place in Oxford. That's like much bigger than this.
So you didn't grow up in a house like this, though?
No, but my mum did.
Right.
So she kind of used to it. Yeah.
All right.
A little bit like this.
Now, we're at the Avalanche Summit, like I've said several times now. Sam and I have talked to a bunch of different folks who are speaking on the main stage, are going to be speaking on the main stage. We've talked about regulation in the UK versus the US. We've talked about gaming on the Avalanche ecosystem. We've talked about institutional adoption. I want to bring it back to what you see in your reporting. What's kind of that dominant narrative that's driving us into the second half of the year?
Well, I think tokenization is a really big theme, and I think if you talk to a lot of people here and Consensus, they think that stablecoins, the stablecoin bill that had a vote yesterday in the US Senate, looks very likely to pass soon. That is the first step in this kind of tokenization journey that's going to have, going to start with this digitization of payments and will lead to the tokenization stocks, equities, bonds, and everything coming on chain. So I think, and people are even forecasting kind of the end of traditional stocks and everything moving to tokens. So companies issuing tokens instead of, securities documents. So I think that's the world we're moving towards, is completely on-chain environment for everything tokenized.
Ben, I'll ask you a question about that. I heard that a lot last week as well when we were in Toronto. We've even seen, as we know, the Kraken is now offering equities. There's other exchanges who are bringing equities online.
Yeah.
If we were to go to all equities, all dividends being tokenized, I have a feeling there's a lot of endemic industry in TradFi that's going to fight that pretty hard. But is it your view that it's a better system? Is it your view that tokenization and utilizing the kind of crypto rails that we've built and the security that now exists within it are actually a better way to trade these types of financial properties?
And can I add to that question?
Yeah.
And are they done fighting? Like, is that fight still happening?
I mean, I kind of disagree about that because I mean, look at stablecoins. I mean, is the dollar in your pocket better than the dollar that's on chain as a stablecoin?
It's different. But I guess what I'm saying is, when I look at equity as, to your point, right? There used to be stock certificates, and you could actually request them and have them at home, and it was very archaic.
Yeah.
And there were people who were, and really institutions that were in the service of the tracking and the storing and all of this. Once we put this on chain, once we put it in wallets, whether those are centralized wallets or decentralized wallets, we are getting rid of, in many ways, a lot of layers that used to be where people made money in the stock exchange. That's, I think, where my question goes to, which is how much are those folks who are still fighting, we talk about tokenization of real estate. There's a lot of people still fighting for the brokerage fees. There's a lot of people still fighting for having to write titles because they make money along the way.
Right.
So I just think there's a lot of people within very traditional old world finance who are very scared of what it means to put all equities on chain or on within tokenization. And I'm just wondering, do you think that to Jen's point maybe, do you think that is a fight that's not even going to happen anymore? Or
I think it'll be a fight. I mean, it's been a fight throughout the history of the internet, right? I mean, we're old enough to remember the 90s when people went to travel agents and they booked, they
what a
used
time.
estate agents to buy houses and things like that. I mean, they still use a broker, but there's a lot of things that used to have an intermediary and there was a bit of kicking and fighting. But eventually, we no longer go to a high street travel agent to book our summer holiday, So
but we still will do wire money, and sometimes it takes 2 days.
Yeah.
And there's a reason it takes 2 days, right? That we know. And so there, I think and maybe my approach is more looking at what friction that was created within the financial markets to specifically create opportunities to make money and create fees.
Yeah.
Right? I think people don't recognize, when you are sending money to Venmo back and forth, the last thing they want you to do is take that money and bring it back to your bank account. Right? If everyone did, then Venmo might not be able to be a business because they don't charge fees, right? So the idea that I'm going to buy an Apple stock token versus the Apple stock itself on E-Trade, or are you saying, no, E-Trade will just have tokens for Apple stock?
I mean, I don't know. I mean, often the regulatory conversation intervenes. I mean, I think about 9/11, for instance, that really put a kibosh in what was already like the digitization of money, of payments at that time. And because we wanted to track every person's identity, and they got very strict about the BSA Act in the US, and that kind of led to, financial surveillance across the world after 9/11 with the Patriot Act. I think that really slowed that kind of inevitable march of, the digitization of money and finance. And it really took 20 years of crypto to get us to the point where we're at now, with a really alternative system to that,
I think, Sam, and correct me if I'm wrong or if I'm misquoting you, but you were saying that you think that some of this could happen a lot faster than some of us think. Did you say that this morning, or am I making it up?
I think it could happen faster than we think. I think there are those that would fight against that because they have very big business interests in stopping it from happening too fast.
Yeah, and so I just feel like we were in this really pivotal moment where it's like, catch up, get on board. We've talked to so many institutions here about how they're thinking about using the infrastructure to, create to make some of their processes cheaper, faster. Even here in the Avalanche ecosystem, we were talking to Kexus from JP Morgan probably about an hour ago. And so I think it's just really like catch up or get left behind. And it reminds me of, we were at Consensus last week, and there was that Blockbuster video mock-up, right? They called it blockchain video. And I think that just really symbolizes the tension we're feeling right now, but it seems inevitable at this point.
But the reason why I bring up 9/11 is that people will use an argument about safety, about terrorism, or something that's really extraneous to, these online conversations to try and kind of stop the march of history, So I think that's the only thing that will stop it. If somebody can prove that, if we put all stocks on chain, it's going to lead to more terrorism or something, or it's going to lead to a lack of transparency. Probably the opposite. But you would need some kind of argument like that to stop technology from taking its place, and that's the reason why finance and medicine has taken longest to really be impacted by the internet, because you've had people be able to make those type of non-internet type arguments for why we shouldn't have it.
Well, and it reminds me of the conversation we had earlier today with Emin. So Emin was here telling us what his keynote was going to be about, which I believe is going to come up soon. And he mentioned the fact that he was doing a crypto project in 2002 that, in essence, he was told, don't do this because post 9/11, you won't get any funding for something like this. So very much what you're saying, he reflected it took him that long to get back into crypto because he was sort of scared off by what happened after 9/11 in work that he found really fascinating. And I think you make a fantastic point, which is crypto now has brought us to the point where we can have that conversation again. And it took, what was it, 8 years between 9/11 and the Bitcoin white paper to come out.
Yeah.
And now it's taken 15 years since then till we're at a point where you can buy on Wall Street.
But doesn't that say something, Ben? When Emin was talking about that, he was talking about 2002, 2003, and Napster and LimeWire tokenizing elements of that. That was before the Bitcoin white paper, right? We have Emin, a scientist at an established university, thinking about this that many years before the Bitcoin white paper. I think that says something, that these minds who can spot trends, who can see the future, who are thinking really academically and critically about this, were thinking about it way back then.
Absolutely. And it's interesting when you think about, this collision of politics and even geopolitics and technology, because often I think these trends are not really about could a human being have come up with Bitcoin in 1990? Probably, yeah. And we probably could have worked out a way to have, much cheaper remittance payments between someone in Mexico and someone in, Botswana years ago if we'd really wanted to. But the reason why we didn't was because of regulation, because of some bureaucrat somewhere taking their cut, some company interceding as a rent seeker in that system. And that's really about politics more than about technology or the kind of ability for people to do things online. I mean, we've been able to send each other friction-free messaging for a long time now. There's no real reason why we couldn't have sent a financial message, which is really what money is.
The point you're making really resonates for me. I did an interview many years ago. No, not many years ago now. Probably a year ago with Vanessa Colella, who heads up innovation at Visa. And she happened to be at MIT, and she was at MIT when Nicholas Negroponte was there. Nicholas Negroponte wrote a book called Being Digital, I think in 98, 99. And if you read that book and you were bold enough to build on the predictions he had, you would have seen the internet come in a much more dramatic way. You would have seen communications and social media come. You also would have seen digital money come. It was part of that prediction set that he made. So I think you're 100% right. People were talking about it. It was the infrastructure there.
Yeah.
I can't imagine looking at that book now and not saying, oh, it was obvious that social media was going to come. It was obvious that gaming was going to become decentralized and put on the internet. We would be able to play all around the world with each other. We'd be communicating with each other. I feel like anyone who looks at the blockchain and doesn't see the opportunity for financial complete transformation is missing out. And we see at events like this, which is, probably every other session is someone's talking about a stablecoin or a tokenization opportunity or a metaverse opportunity. At Avalanche right now, this is like living in the future in a really wonderfully odd, beautiful way.
Yeah, and it's not a crypto conversation anymore, right?
Yes,
so we're all from the kind of crypto world. I mean, this is very like a mainstream thing now. You've got Anthony Scaramucci here. We've got Larry Fink, the most powerful man in finance, the head of BlackRock, talking about tokenization being the future of finance. You've got the conversation in Washington, D.C. these days. These are accepted kind of ideas that are out there and are very much pushed by this Trump administration. It's embracing it. And everyone thinks that this stablecoin bill is like a milestone that's going to start everything.
We spoke about this earlier. What's your prediction on the market structure bill?
Well, I mean, we were hearing last week that there might not be a market structure bill, that might be too complicated to pass. But we'll see. There were some people saying that the stablecoin bill wouldn't pass, and it looks like it's going to. Right. So it all comes down to what the Democrats want to do, and the Democrats are really split in terms of their coalition. Not to get too political, but there is this kind of Warren wing that is basically anti-financial innovation, anti-crypto, and then there's a more progressive financial Democratic wing. Yesterday you had, I think there was 6 or 7 Democrat senators who went with the Republican side, who wanted to pass the bills. So it seems like there's enough people in the Senate, at least, to pass something. But we were hearing last week from a bunch of lawyers that they didn't think that the market structure bill, which is a much more comprehensive piece of legislation covering the whole of crypto, was going to pass, at least in the next few months before the recess.
Other than finance, we've seen, I would say collectively, that this past year, finance has been what's brought the most people into crypto in, right? Just the ETFs alone.
Yeah.
Here, we know there's a lot of conversation about stablecoins. There's a lot of conversation happening around supply chain. A lot about gaming. What are the areas you look at that you think are really going to bring this big wave of new audiences into crypto?
Well, stablecoins. I mean, everyone's going to be using crypto from now on, right? Because and I think it's when people don't know that they're using it, then that's when it becomes most powerful. And when you don't have to think about the UX experience, when you don't have to think about the method of payment, when it is just part of your everyday life and you're just hitting a button and it's crypto, that's when the thing's really changing. I mean, you know, I'm really excited about DeepIn. We had some DeepIn discussions last week, and I was really fascinated by this conference that's been in New York the last couple of years, the DeepIn Summit. Yeah. They're going to Kenya this summer, and I think that's kind of interesting because when you think about the idea of decentralized physical infrastructure being coordinated on a blockchain, on-chain, you know, you can see that taking off the most in places where they really need like infrastructure for, you know, broadband, where they really need infrastructure for, you know, solar panels and, you know, the energy grid, where they really need infrastructure for charging cars. You know, that can be coordinated through DeepIn. I think that's very powerful. And I think that would also bring in lots and lots of people into this on-chain system.
Ben, I want to come back to the stablecoin conversation for just a second. You know, we've been talking so much about stablecoins lately. And my question for you is the CBDC conversation dead? Now that stablecoins have advanced so far, we have stablecoin companies popping up all over. We have existing traditional financial companies issuing stablecoins or thinking about stablecoins. What's going on with CBDCs?
Well, I mean, I think I think China will still have a big CBDC, and I think it will look to push that into its kind of mercantile relationships, like in Africa, for instance. So a lot of like places in Africa where China has a lot of sway, where I think that they will, and they already are. They're looking to get those trading relationships on the digital one CBDC they have. But I think in the West, I think there's been a real backlash against the idea of a central bank digital currency. And I mean, it's hard to imagine, like, you know, Powell going on the radio or going on TV and sort of competing for mind share with, you know, a Circle or a Tether or any one of these major financial companies that's going to now have a stablecoin and saying, well, you really should be using our Fed CBDC rather than Circle USDC. I don't think that's going to happen. I don't think there's any way in which a central bank can compete in terms of, you know, publicity, in terms of like mind share with these major financial forces that are going to be now employing stablecoins. So I think CBDCs are like enterprise blockchains from the early days of blockchain. They're going to kind of like, they were kind of the acceptable thing that people got into when they didn't want to get near crypto, but they're going to sort of go away because they're inferior. I mean, why use something developed by a few bureaucrats in a central bank when you can use something that's developed by a really sophisticated fintech company?
Do you think that, just continuing down that road, we heard Emin talk about how they're at almost the sub-penny transaction level right now in Avalanche, and the speed is there, right? So they have speed and they have very, very low cost fees at this point. It makes me wonder the challenge of the opportunity that Tether and Circle have right now, that really anyone can create a stablecoin. You know, you have to be convinced and comfortable that you want to have the treasury behind it, right? And I think that's what will make people adopt or not adopt.
Right.
But you know that whether it's Tether, PayPal, Visa, Taylor Swift, whoever it is can really issue their own coin, knowing that that the volume of fees on the transaction still are going to add up, and that you're really going to be able to support it. Plus the obviously DeFi opportunities and yield and staking. Do you see a world in a few years where it's thousands of stablecoins, or is it really the big 2 or 3 that are going to dominate?
I think they're going to be thousands of stablecoins. I think. I mean, my own view of the kind of deep future is that I think a lot of this technology is going to sort of not be so kind of visible, and I think we're moving to a world of kind of ultimate swappability around value. So I think there will be a stablecoin in the background, but it won't be like using a payment system.
Right.
It will be like just tapping very seamlessly into a system that allows you to transfer value between two people, and I think the kind of technology will be in the background. So there might be 1,000 stable coins, but they might be all infinitely swappable with one another.
Each other.
Yeah.
That's interesting, because I always imagined a world where they consolidate, right? And there's maybe going to be like, I don't know, 10 to 20 stable coins in the future. But as you were saying that,
yeah.
when we were talking about AI agents earlier, that makes a ton of sense to have thousands of different stable coins swapping, but being used by AI agents, so we don't really interact with them.
Exactly. And I think, you know, Michael Casey, a former CoinDesk chief content, I mean, talked about this idea of the ultimate atomic swap, where even like something that's tokenized, like this iPad sitting in front of you, maybe that would be tokenized on chain, and maybe a portion of that iPad could be swapped for some USDC or for some Bulgarian money or for some euros or for part of a car. It's like if everything is now tokenized and on chain and part of a marketplace, then why can't everything be swappable with one another? So why shouldn't, you know, Sam have your own stablecoin? You can, you know, you could tokenize your possessions and swap them with Jen's possessions in its kind of infinite like swappability system.
All right.
So,
we're going to have to leave it there, Ben. We will continue.
Sam coin coming.
Yeah, we will continue to opine about the future right here tomorrow. Right now, we are going to go to the main stage where Aave Labs CEO and founder Emin Gün Sirer is giving his keynote. We are going to leave you, so we are gone for today, but we are back tomorrow to bring you a behind-the-scenes look at the Avalanche Summit in London. Thank you for joining us. I'm Jen Sanasi here with Sam Ewan and Ben Schiller. Have a great day.
Give things, right? This is known as the tragedy of the commons. Everybody wants something, and when it comes to giving that thing, it's a little harder to get to happen. So my idea back then, as a very, very young, freshly minted professor at Cornell University, was, well, we need to do something to incentivize people to give resources to the community pool, and somehow disincentivize people who constantly take things. And the idea then, of course, there were many ideas. You've heard of BitTorrent, which is based on barter. For me to give you a block, you have to give me a block. And I thought, barter is so archaic. Why don't we invent some kind of a magic internet token so that if you wanted to take something, well, you couldn't just constantly take it. On occasion, you'd have to earn that token back by doing something good for the community. So in 2002, I built this system called Karma. And Karma is the world's first digital currency with proof of work minting. So parse that a little bit, it's 6 years ahead of Bitcoin. Now, let's be very clear, I did not have the brilliant insight that Satoshi added later, which is that insight where he folds the consensus protocol into Karma, into proof of work. But nevertheless, this is what got me started on this path. Somehow, though, my mentors at the time told me, do not touch this topic. It's toxic. The regulators will come after you. Everybody's concerned in the post-9/11 world with all sorts of things like money laundering, etc. You can't make a career out of this. So I left this area, and I kind of just did a whole bunch of other things involving peer-to-peer systems and so on. And then Bitcoin came along. Who remembers the first time they read the Bitcoin paper? It's like your first kiss you can't forget. It's like all of you, almost all of you, I'm sure, remember how that was. And for me, it also was an eye-opening moment. And you know, what did I see there? I saw a new family of consensus protocols, very different from the ones that were taught in graduate school. And it's just a much better way of approaching that probabilistic idea of consensus so beautifully done was something that captivated me. And then the next thing, of course, is there are a whole bunch of things that people take for granted. There are a whole bunch of asserted truths in that paper and in the writings of Satoshi Nakamoto. And we didn't have proofs for them. And to an academic, if there are claims but no proofs, that's very dangerous territory. And if you're going to build sort of the next generation of finance, you got to have proofs. And when Itai Ayal and you know, a postdoc at Cornell at the time, and I looked at Bitcoin, we saw that some of the claims were actually wrong. And we came up with something. How many people have heard of selfish mining? That's too few. So we came up with something called selfish mining. So if instead of following what Satoshi told you, you don't follow what he says, but you follow a different strategy for mining, then you could make more money than your fair share. How much more? Up to 2x more. So if you have 49% of the hash power, you could actually make 100% of the Bitcoin rewards. So this, of course, is heresy. It implies that Satoshi made a mistake. And of course, for that, I had to be roasted. I got death threats. There were efforts to write a whole bunch of letters to Cornell to fire me. And there's a whole bunch of things that happened. It was really stressful, but also very funny. And thank God for tenure, that I could just sit back and watch as the letters came in. And there were 3 different projects that people crowdfunded. And we were like, Itai and I were just sitting in the office thinking, we did the work. Why are these people trying to, like, you know, just crowdfund this effort to show us wrong? It's like, you know, prove that Emin doesn't know what he's doing kind of an effort. To their credit, all 3 of those projects flipped at the conclusion of their efforts and said, you know what, every time we try to prove them wrong, we get the same results as in the paper. This is a thing. And so I went from being persona non grata to suddenly people realizing, hey, these people don't want to just undermine our profit. They work for the same God. They are here to push the cause of cryptocurrencies. They're good people who are trying to show the actual security properties of Bitcoin so that we can more securely deploy these systems. And after that, I worked on something called Bitcoin NG, Bitcoin Next Generation. So as you know, with Bitcoin, it takes about 3 to 6 confirmations, about 30 to 60 minutes for your transfer to be finalized. That's a hell of a long time. At the time, it was amazing, right? It's far faster than sending a wire by bank. But yet, I knew we could do much faster. And the core idea here is kind of interesting for those of you who did not follow the Bitcoin NG saga. The idea is we still use proof of work, but normally Bitcoin uses proof of work to immortalize what happened in the last 10 minutes. Instead, we use proof of work to elect a leader who immortalizes transactions as they happen. And that changes the game immensely, and suddenly the finality of Bitcoin goes from 30 to 60 minutes to something much, much, much shorter. And I learned quite a bit actually from this effort. There were 4 different projects that use Bitcoin NG. I had almost nothing with all of them. But I saw that if you have a good technical idea, if your execution is not good in other ways, you don't necessarily win. And these Bitcoin NG-based systems are nowhere to be found. They still exist, but they did not see big success because the execution was flawed in various different ways. Then I worked on these elusive concepts, scalability and decentralization. These words are thrown around the whole time. It's essential for us to be decentralized. It's absolutely imperative that we build decentralized systems, or else we're just replicating the banking world with more steps and more complications. But then what is decentralization? How do you measure it? And I answered, I did a bunch of things. So what does it mean for a protocol to scale? Like, what does that actually mean? If somebody talks about scalability, but they don't really talk to you about the two different metrics that relate to each other. As something goes up, the other thing should not go up. As you add more nodes, latencies should not go up. If they are not talking in terms of multiple metrics, they're not talking about scalability at all. TPS is not a good measure of performance. I can give you as high TPS as you want. In fact, look around at other competing projects. They do this all the time. Just by embedding a hash of the phone book, I suddenly have incorporated the entirety of the phone book into my system. That doesn't really get us anything. You have to assemble the data, you have to process it, you have to validate it. So it was a big push at the time against the forces that be to say TPS is not correct. It's not the only metric. You have to also, besides throughput, you also have to look at finality and time to finality. And so what's the difference between POW and PAWS? I think this was an interesting one. Even my academic colleagues were confused, and they kept referring to proof of stake as if it was a consensus protocol. These are not consensus protocols. I was the first person, I believe, to my knowledge, that made that distinction crisp and clear. And we did some other fun stuff. One of the things that we did do was to measure the distances between Bitcoin miners. This is a little hard to do. We borrowed techniques that physicists use to discover exoplanets. You take a gazillion measurements, and from tiny variations, you discover, oh, these two guys are actually the same people in China pretending to be multiple different miners. Or these two guys are fairly far apart, etc. So then I was involved in the DAO hack. This was kind of fun. I wrote a paper called A Call for a Moratorium on the DAO. So the call was not heeded. And how many people know the DAO hack? Is it all ancient history by now? It's been 9 years or something. So the DAO hack was monumental for Ethereum. We identified 9 flaws. There was a 10th one that I thought, hey, maybe this is not a flaw. I was wrong. That was a big flaw. So the hacker used that one and one of the 9 that we identified to steal 15% of Ethereum out there. So that was a terrible, terrible time. And I helped recover after that. It turned out that Vitalik and Vlad were both in Ithaca. We were running a project, a summer camp together. So you might have heard about Bitcoin covenants and vaults. One of the things I worked on was this thing called covenants and vaults, which keep coins safe at rest. So when your coins are in cold storage, you want them to be unstealable. And we discovered or came up with this idea of hack-proof vaults, where if the coins start moving, you can recall them ahead of the hacker. And so it's a way to add security to coins at rest without breaking down the immutability of the Bitcoin blockchain. Anyhow, I don't want to bore you, and we're coming to the end of this. My journey took me to where it almost always takes a lot of people, which is, what about layer 2s? They suddenly became very prevalent about 8 years ago. And everyone who runs out of tools in their tool chest, everybody who runs out of ways to scale their system, decides, you know what I'm going to do? I'm going to spike this ball and let somebody else handle it because I've run out of options. Layer 2s are a concession to say that I am unable to take this thing any further. I can't scale it at my own layer. I'll let somebody else take it from here. And the thing, of course, with turtles all the way down is, if you don't know how to solve something, chances are that somebody else is also unable to solve that very thing. So I never believed in layer 2s, and the fact that they fracture liquidity is absolutely a killer. The more layer 2s you have, the less liquidity you have concentrated on any one chain. But much more importantly, they fracture communities. Communities divide and fall apart. People's incentives separate, and different communities splinter away. Every layer 2 becomes a parasitic thing on its underlying chain. And you see this playing out. I cautioned Vitalik against this, but we see the results today. So what did I do? Well, I said, well, look, if you guys must have this thing, and if you want to build something like the Lightning Network, which has all these terrible properties that I don't believe in, let me show you how to do this right so that you build fast layer 2s. And we built the world's fastest layer 2. It's still the world's fastest layer 2 umpteen years later. It's called T-Chain T-Chan. And it uses hardware security modules. And I think we invented the world's fastest way to get Bitcoin. We did something with the University College London here. We sent Bitcoin from UCL to Ithaca to Cornell in about 50 milliseconds or so. So, but the thing that I'm most proud in all of this time is the work I did with the John Oliver Show. I'm an uncredited writer in one of the episodes, and I introduced the word hodl and wrecked into that show. So if you are using that, if you think that's mainstream, I had a tiny, tiny hand to play in making those words go mainstream. They did so much due diligence. They did more due diligence on everything I said than any other press outlet that I've ever worked with. They're amazing. And if you do listen to that episode, listen to him carefully. He does sound more like me, like the sentences are a little longer, a little stilted. It's not exactly like him, because every single word came from me there. Except some of the jokes, the funny ones, those are from them. So, what happened then? And this is what brings us to today. Ultimately, that journey took me to the fundamental realization that we need to address the problem at its core. We need fast consensus protocols. You can't punt it to someone else. And if you as an expert don't know how to do it, then nobody else will solve it for you. And that took us to Avalanche Consensus, which is a new family of consensus protocols. It's impossible for me to underscore how rare that is. My field of distributed systems is only 50 years old, and there have been only three families of protocols: classical, proof of work as in Bitcoin, and now Avalanche. It is the fastest, it is the most scalable, and most importantly, it makes no compromises on that which matters most, which is decentralization. And achieving those is incredibly hard. Everybody else, other than us, every single chain out there compromises on decentralization. It's easy to build a proof-of-stake coin if you reduce the number of people who are participating in each decision. So trivial. I'll just say, hey guys, you 10 are the ones who are making the decisions. Done. And that's what really they do. It's like you 10, and then the next round is like you 10 over there. That's okay, but those 10 people are a vulnerability, and they are no longer decentralized because that decision got made by a small sub-quorum. Now, you can't do that. It's just not in the crypto spirit of things. And this is true for every single chain out there but us. So, this was such a big breakthrough that I thought I don't want the Bitcoin NG experience again. It is such a big breakthrough that I can't punt this to other people to carry out. They will screw up something else. They will keep so many coins for themselves that it's going to die. They will do some dumb thing. They're going to lose their own coins and tank the system, etc. This has to be done properly. Someone has to show the world that that is being sold, the dream of highly scalable, super fast systems, is achievable. So to do that, I left Cornell. Everything else that happened after that is all you. I'd love to take credit for where we are today, but everything else, other than the initial formation of the protocol, is all you guys. So, what does that mean? Well, we introduced infinite scalability. There are only 3 systems that tried to do what we did. It's us, Cosmos, and Polkadot, which was build a system that is not just a single chain, but a collection of chains. And of these 3, we're the only ones that did not introduce artificial bottlenecks. You get pelted with questions as a founder. How are you accruing value? How are you doing this? How are you doing that? And to appease those cracked voices, people end up making crazy compromises. How are you, like, for example, not making sure that everybody is as secure as everyone else? A lot of these questions come from a good intent, but the framework is wrong. Polkadot, for example, tried to have what they call shared security. What that means is a shared bottleneck. So they have to have these parachain auctions, etc. They raise some money from it, and then they run out of that money. It's just not a good way to create value or enduring systems. We came up with a way where every time somebody introduces an L1, the capacity of the system grows. Every time somebody wants to build a system that's bespoke for a particular use case, they can. They're not hampered by other validators. They share just as much as they need to, and no more. And we built interoperability from the ground up. We're miles ahead of every other chain out there, every other protocol out there in terms of interoperability. What they are trying to tackle now is something that we've already done and gone. If you want to create your own token, you can. If you want to take your token and use it as gas, you can. If you want to build your own L1 powered by your own token, you can. These are things that we started out building because we realized just how important they were. So now what we're working on is single chain performance. It's time for us to focus on the engineering of a single chain. Now, one of the things that we did recently, that some of you may or may not know, it was the Etna upgrade followed by the Octane upgrade. That's 2 upgrades. One was in December, the other was in April. Compare that to projects that ship every few years. We shipped 2 major upgrades within 5 months. One of them made it really, really easy to launch our own L1s, and the second one completely changed the way gas dynamics work so that we now have the world's fastest, cheapest EVM. Transactions are typically less than a penny and often less than 100th of a penny. So here we are, just shortly after these 2 upgrades, and we have many more in the works, and I'm really excited about the technical roadmap that Corey shared with you earlier today. Each of these are bringing the best of scientific breakthroughs to blockchains. And one of the most important ones in this regard is the async execution, ACP 194. So what it does is it extracts parallelism on a single given chain. It allows the consensus portion of the process of accepting a transaction to be performed in parallel with the execution portion. And you will probably have heard of efforts to build new chains that try to, quote, extract parallelism. Those people are trying to build a single chain where they're trying to get some parallelism somehow, but it's really essentially a sort of a feeding off of breadcrumbs kind of an idea. We extract coarse-grained parallelism, the easiest kind to extract, very, very cheaply. You can have as many chains in parallel as you like. Nobody else comes close to what we do on that front. And on top of that, on a single chain now, with async execution, we will extract micro parallelism to get even faster speeds and even higher throughputs. There's also a big push for changing the way we store data on a blockchain and the way we organize the data on disk in a database. So first of all, we're reducing the amount of data that we put on-chain, on the nodes. The node state growth is, if you do the naive thing of storing everything forever, of course is going to be very, very difficult to deal with. So we're reducing all the redundant data. We're building lighter clients that make it really easy to run validators. And we're introducing state rent and tiered storage for identifying the hot data from the not so hot data that can be stored in tertiary storage. On top of this, we have a new database called Firewood. Everybody else in this game uses a database built by Google for the purpose, almost everybody else, uses a database built by Google for the purpose of storing your bookmarks in your browser. We're changing that. We're bringing a proper new database built from the ground up for blockchains. This database performs Merkleization as a matter of storing data on disk. It's not an afterthought. It is not something you add on as a layer. It's not something that's expensive that you add onto an oblivious infrastructure. So that is going to give us performance that other chains can only dream of. And finally, those of you who did come to the summit maybe 2 years ago might have heard me talk about something that I'm super excited about, which is the marriage of AI with blockchains. It is time to make it easy to write code for blockchains. It's time to open this field up to everybody. And we're not going to be able to do that if we force everyone to be a programmer. We're not going to be able to do that if we force everybody to learn Solidity, as nice a language as it is. I happen to like it quite a bit. It's just not going to happen for the folks at large. For that, what we're doing is building chains where every validator runs an embedded LLM. And the chain transaction format is not bytecode, it's not a virtual machine, it's free-form text. So you can write transactions like, I hereby give you $5,000 for your movie if you can raise $5 million by next, September. You just write it out in English, or Tagalog, or German, whatever your native tongue is. And then the LLM interprets it for you as if it's a trusted execution engine, as if it's a trusted executor. Kind of like a lawyer in the sky, but has no conflicts of interest. Of course, as AI gets smarter and smarter and has a mind of its own, we will run into issues. But this is something I'm really, really excited about. It's a moonshot. It may or may not work. And we will probably lose a bunch of money experimenting with it. But it's going to be well worth the effort, because otherwise our field is not going to go to the masses. Let me wrap up by talking to you about what we are not doing, because often communities are defined not just by what they do, but by their ethos that prohibits them from certain things that really are a no-go zone. We do not cut corners. We do not cut corners, and I cannot say this enough. We do only sound, scientifically sound, properly documented, properly understood efforts. The Avalanche system could have gone out the door many years ago, but it didn't. It needed that proof set that came from Team Rocket. We do not compromise on crypto principles. It's easy to build something that's centralized. It's so trivial, but what's the fun in that? That's not what got us started here. It's easy to build something that's hidden behind layers that require $50,000 per validator, etc., that supposedly goes fast. That's not what we're about. We do not build for fair weather. All of you have seen what is a Flugtag, those like things that people create and they launch them off of those ramps in Germany. You can build something that flies, on a good day with the wind on its back. But when the load comes, it croaks. And then what do? You download your state from Google Cloud to rebootstrap your system. That's not the Avalanche ethos. And we do not constantly bait our community with things to come. We don't want to wait for Godot. There is no crypto shiny object that's going to come and save the day and deliver the promised land to us. We build stuff that works based on sound science. And I'm really, really proud to have attracted, as developers on top of Avalanche, people who share this ethos of actually building things that work. To wrap up, half of what brought us here was this belief in science, to apply the best we know from academia to blockchains. We ended up with the fastest consensus protocol with the most scalable architecture. We're now working on improving the engineering of single chains so that we have the fastest, most decentralized chain for any given use case. The other half of what brought us here is the community. And for that, I am grateful to you all, and I cannot wait to see and hear about all of the cool stuff that you all are building today. Thank you so much for sharing some time with me today.